All the analysis, what you need to know.
We absolutely do. You mentioned all the green on the screen there. I'll give you a little bit of red, and that, of course, is in the futures when it comes to the Swiss market. A lot of that seems to be a reaction to that Nestle story, and that's going to be the major stocks to watch, or stock to watch, I should say, that we see going into the open at the opening trade already, that change of leadership. Whether or not that's well received by the market, is that positive? Will that kind of plug some of the pain that we've seen in the stock year to date, Guy?
Absolutely. Right, here we go. It is Friday. It is time for the opening trade. Nestle is going to be front and centre. European markets are largely likely to be becalmed. So here it is. The opening trade. Europe gets going this Friday morning, and we're expecting, dare I say it, another quiet one. And there you go. The FTSE 100 is a little bit higher, but not by much. I feel like I've said that fairly often this week. And there we go. The stock 600 up, but not by much. Again, similar kind of narrative. I do have the Swiss market on that board. Brilliant. We will see how it opens, but I suspect it may take a little while to get Nestle open this morning. The bid offer is going to be one to watch out for there. That is the key stock story that we are going to be watching. A change in leadership. Does it lead to a change in targets? The DAX is open. It's up by 0.2%. This is exciting stuff that is happening here. I suspect below the surface, actually, there's more action. So why don't I hand things back to you?
Yeah, you're really building up the momentum there, aren't you? It's kind of a rotation trade. It's exactly what we thought it would be in this pre-market story, which is basically that the outperformers of last week or this past couple of days are perhaps the underperformers right now. You are getting opening trades, at least from the Eurostoxx perspective on Nestle here, down a whopping almost 4%. It is your biggest index weight and just showed up, now overtaking some of the pain we're seeing in some of your other sensational six, your ASMLs, your Novo Nordisk, your Unilever. Some of your heavyweights, again, that have been outperforming this week are your underperformers this morning. But again, it's that Nestle story that we are waiting for when it comes to the Swiss market. Again, kind of your biggest weight, not only on stock 600, but on the Swiss market as well, which, by the way, as we start to see those other stocks open, seem to be currently in the green, but we're going to keep you apprised of all of those moves.
Down by 3%. That's a big move on top of what has been already a big move to the downside for Nestle. So the market just doesn't know. In some ways, this is not a surprise that Schneider's stepping aside. It's been a really tough year. This is a company that's facing an input cost problem. It has done for a while. We're watching what's happening with the consumer very carefully. In some ways, this should be a place you want to hide out. You would have thought the staples would be a place you want to go, but actually this is kind of, they've taken it more high end. So is it more exposed, actually, the consumer's trade down story than it used to be? Anyway, it's under pressure, and I think we just don't know about the targets yet. And I think we're going to have to wait for the Capital Markets Day in November before we get that information, and how big a kitchen sinking operation we are likely to see in some of those targets.
And we should point out that the broader Swiss market is still closed, but the Nestle pricing seems to have come in. We're still waiting for the other Swiss stocks to open off of the back of it. And to your point of getting some research coming out of Vontobel as well, basically saying that, yes, a leadership change was needed. We're expecting some more, or at least they're expecting some more further changes in top management as well. It looks like we're getting that initial pricing coming out of the Swiss market as well. I'm just pulling it up on my screen, and that's where you're seeing the pain. The red on the screen, Nestle, of course, taking the beating off the back of it. UBS is your biggest mover to the upside, but not really stemming much of the pain.
Dina Polska, the supermarket chain, Joe was just talking about it. It's a stock we don't talk about very often. Down by 13% this morning, I think, at the get-go of trade. So you highlighted
consumer stocks are taking the pain today.
That does seem to be the case. It is certainly where the pain is being felt on a percentage terms. Let me just see if it's where we're still seeing the pain in terms of the points, because I think that's going to be critical. That's definitely Nestle. But as you say, ASML's in there, Novo's in there, which is quite significant. So you did see some of the tech stocks also rolling over yesterday quite significantly. But Dina Polska's in there too. What I think is interesting is that Unilever is a little softer this morning. What you're not seeing is maybe people rotating out of Nestle into Unilever.
More trading in sympathy than against.
Yeah, precisely. Yeah. So you're not seeing that kind of portfolio effect. You're maybe seeing concern around the entire sector story.
Well, we're going to let this pricing shake out, and we're going to come back to the story, of course, because in the meantime, as we look forward to the rest of the trading day, all focus is on Jackson Hole, and not just what Jay Powell says, but what many of the ECB speakers say as well. We actually heard from Martin Kazaks on the prospect of rate hikes. Take a listen to what he had to say.
Given the data that we have at the moment, I would be very much open for the discussion of yet another rate cut in September. But we'll see. We still need to see the new forecast. We still need to see August data for inflation. But overall, I would say, even if inflation over the next few months keeps moving sideways, it is consistent with further rate cuts.
ECB's Martin Kazaks there speaking to Bloomberg, and of course not only of the ECB, but of the Bank of Latvia governor as well. He's speaking at Jackson Hole. He's talking about the prospect of those further rate cuts. Let's talk about what that looks like in both sides of the Atlantic, really. Joining us now this morning, Hani Reda, Global Multi-Asset Portfolio Manager over at PineBridge. Is 25 basically the base case here out of the Fed in September?
Good morning. Good to be here. I'd say yes, base case is, because the data, they are very data dependent, as they've told us. And the data has been a mixed bag, some bad in terms of unemployment going up, but some decent numbers in terms of retail sales and yesterday's services PMI. That mixed bag tells them, yes, probably have enough to get going, but no need to really hit the brakes.
So if that's mostly priced in then, it seems to be consensus. 50 seems to be the consensus that would spook the markets. What do the markets do from here?
Yeah, so I think you have to really zoom out. There may be some short-term reaction to this, but it's really critical to keep in mind the sequence of events that play out from here. What the Fed does, whether it's 20 or 50, is not going to change the economic outcomes for the rest of this year or into early next year because of those lead lags. It takes a long time for these things to come through. And so they will only be cushioning what will happen late into next year and beyond. And so for now, the Fed has made its bed, and they're going to have to lie in it.
I hear what you're saying. And yes, from an economic point of view, there is a lag. But from a financial market point of view, there isn't.
Yeah.
And the market will front run, actually, what is going to happen next and try and anticipate it. If we get 50, what is the signal for the market? Is it things are bad, and actually, as a result of which we need to take risk off the table? Is it good? They're cutting 50, they're getting in front of the curve, they're going to save the soft landing, they're going to deliver that soft landing. What is the message from 50 versus 25?
So the market will initially, I think, see a rally in rates on the back of that. Because
on the back of 50 or 25?
On the back of the 50.
Right,
they would see a Fed that is being much more responsive, and they will price in more cuts all the way through into next year.
Yeah.
And so that will be the initial reaction in the rates market. And risk, I think, is going to be much more ambiguous because the market will initially feel some relief in terms of the Fed's on the case and they're here to the rescue. But this is where the economic outcome is really important because that can be an ultimate head fake.
Talk to us more about the economic outcome here because and I'm quoting again Neil Dutta out of Renaissance Research, basically saying that every recession starts with a slowdown, but not every slowdown is a recession. How do we tell the difference? Where is the sensitivity from a market's perspective? If payrolls are this volatile data set, we're getting these revisions, what is the market most sensitive to in terms of getting that clue?
I think it comes down to actual layoffs at this point. So I think that's why the unemployment rate itself can be a bit misleading because it is a mix of things. It's telling you about the participation rate. It's telling you about layoffs. It's telling you about the pace of job growth. So layoffs become the ultimate litmus test to say that we're now getting into a cost-cutting cycle by companies, and that's going to lead to negative job growth. And that's what will ultimately matter economically.
So what does that number look like then? We're looking at 4.3% unemployment right here. We've had previous presidents brag about 3.9%, so we're not far off. This is a good historical unemployment rate. What's the target then?
Yeah, again, you flip back to the unemployment rate. I want to put you back to the claims side of things. Yeah, and on the claims side, I'd say, look, we've seen that there's a lot of seasonality in this data now. It's very distorted. I'd like to see claims. Well, I don't like to see claims, but I would require to see claims in the high 200s to begin with to signal that something has really changed here, because below that, it is well within noise rather than signal.
If the Fed goes 50, what does it mean for the Bank of England? What does it mean for the ECB?
I think that gives them more room to, if they need to, and so it relieves the pressure of having to move in lockstep with the Fed. But I think their own conditions would be warranting slowdown as well. A potential acceleration of cuts, because these are open economies. And if that Fed's going at 50, if it's because the US is much weaker, it's likely to spill over into their economies too.
Like at the moment, the US economy, and I'm only taking this from the commentary I read on earnings calls and listening to commentary on Bloomberg when CEOs come on and talk to us, they're all telling me a fairly positive picture right now. They're actually telling me that the economy is doing okay and that things are all right and they don't see a recession coming. We keep asking them the question, do you see a recession? No, don't see a recession coming. What's the danger that if the Fed goes 50, that inflation comes back, that the economy re-accelerates, that actually it ends up with exactly the problem it wants to avoid here?
You're putting your finger on how difficult it is to thread this needle. And that's why our advice to clients is you need to be humble and nimble.
So what are you doing right now?
Humble and nimble. So right now, we've reduced some risk because the data overall, the labor market data, has been loosening up. And the pace of it is starting to become a bit more uncomfortable. So the probabilities, I think, is still possible for us to get through, squeak through without an actual recession. I think that can still be a base case, but the probabilities are shifting. And so moderating some of the risk that you have on makes sense at this point, but then being nimble, because unfortunately, it is going to be very binary. If it's a soft landing, markets are off to the races. If it is a hard landing, you get the opposite outcome. And so be humble in terms of your ability to determine what that outcome is.
Sure.
But be nimble.
Prepare to react.
But moderating that risk, does that actively mean going into hedges, havens, your golds, your dollars, your bonds? Where are you on that?
Yeah, so we were shy about bonds for a long time, but when we got into the high fours and we saw that inflation really seems to be cooperating at this point, bonds became much better as a hedge for a potential slowdown. So that correlation now is working quite beautifully, and I think that will continue. So bonds can definitely help you there. And then we like gold specifically as a geopolitical risk hedge. And that risk is still there. It's still active. We don't think it's going away.
Even
and
at
so
these
you
levels?
can combine it with...
Even at these levels?
Yes, because the overall track for us is lower yields, lower real yields in particular. Real yields have not come down much, and that's going to be an additional support for gold from here.
You talk about it being binary. The risk is binary. It's either going to go one way or the other at this point in time. We're at the watershed. What is the claims number there for? If claims is the pivotal figure, what is the claim number you're looking for to go, we're on this side of the watershed or we're this side of the watershed?
Yeah, so I think you're asking me what are you going to watch. I'll give you one number, that's claims, but we will be looking at a totality of a lot of different things. I'm going to sound like Jay Powell here.
You sound like an economist. On one hand, we can do this. He's not an economist.
No, but I think, layoff data as a whole is what you need to look at. That's what I mean. So, initial jobless claims is one of those things. You can look at the JOLTS layoffs. You can look at what you see from the challenger side of things. And so you need to see confirmation that it's happening across the board. That's when you have more confidence that this is now shifting into a non-linear phase. Because that's the other thing to watch. It's not a level that matters. It's also the trajectory. And so far, we've had a gradual, fairly linear loosening up that's happening. Up to now, that is not a reason to flip into hard landing mode and adjust that way. If we start to see that non-linearity come through, that's what I would pay more attention to.
Yeah, and maybe that's the argument around 50. You get to that point and you start seeing that kind of non-linear pickup. That's when maybe a slightly more aggressive rate policy becomes maybe more manageable or doable or necessary. Hanny, great to see you. Nice to see you. Thanks for stopping by to see us this Friday ahead of Powell. A little bit later on, Hanny Redder, Global Multi-Asset Portfolio Manager, joining us from Pinebridge. There is one stock you want to watch out for on the Call 6 this morning. we've already kind of given you a clue as to what it is. It is Nestle, and as you can see, it is by far and away dominating the narrative when it comes to the key core stocks that we watch here in Europe every morning. But it's interesting that Novo's down 0.5% this morning. It's interesting that ASML is down by nearly 1% as well this morning. Nestle definitely takes it. It's down by nearly 3%. So let's check in on the individual stocks, figure out what is happening here. Joe Easton, back over to you.
So Nestle is the big one, Guy. As you say, it was down around 4% at the open, now down 2.9%. Now, bear in mind, for a company this stable, it is a big decline over the past couple of years. You can really only count a handful of times when it's dropped as much as this, and it is the biggest points decliner on the Stock 600 by some way this morning. Analysts questioning whether now the guidance at the company will be dropped with this new CEO coming in. There is a bit of a split on whether that will happen or not. We'll have to wait and see. There has been a conference call going on. We've been getting headlines on that. We'll wait to see how that progresses, but a pretty decent decline on that stock for Nestle in Switzerland at the moment. Then in terms of Getinge over in Stockholm, medical transportation, a pretty punchy premium on that. About 11 times sales is the multiple on that deal that they're doing, coming down very slightly, around 1.5% at the moment, not getting a really positive reaction on that deal. But the big dropper in Poland that you broke earlier is, of course, Dino Polska over on the Warsaw market, down 13%, a massive plunge. It's the first time they've reported a decline in profit and sales since they went public 8 years ago in Poland, according to analysts today. So that is a heavy decliner for the Polish supermarket. Not all negative in earnings, though. We've got ALK at Bello. This is in allergy vaccines over in Denmark, one of the many Danish pharmaceutical companies, gaining around 9% following some strong numbers out of them this morning. We've got a little bit of a surprise one coming from Direct Line today, warning that they actually overstated some of their solvency ratios in their last earnings report. Unexpected from them. We are seeing a bit of weakness in that stock. Not a very positive one for them today. That is, of course, the motor and home insurer in the UK. Staying in the UK, quick look at energy stocks. Energy bills going up around 10%. We did not want to hear that, but that is the news from Ofgem, and analysts actually warning that there could be another increase as soon as January. So we're keeping an eye on the suppliers of UK energy, Centrica, SSE and E.ON over in Germany, but not a big reaction, potentially all priced in. We know this is the situation at the moment. One morning call to bring you, and a pretty punchy decline. We've got Melrose Industries double downgraded from buy to sell at UBS. They say the market is overstating the value of the aerospace company's portfolio. Pretty remarkable. UBS reckons it's worth around half of what consensus has it as at the moment. So they are cutting that stock. They've been a long-term buyer, and Melrose down 4.8% in London this morning.
All right, Joe Easton, we thank you so much for bringing us those stocks to watch. Coming up on the program, we're diving into where he started. After 8 years at the helm, Nestle CEO is the latest consumer goods boss to be shown the door. We're going to dive into his replacement and the stock market reaction next. Stick with us. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Call it 20 minutes into the opening trade. This is what the picture looks like first thing this morning. Cautious start. A little bit more positive maybe than it's been over the last few days, but we are anticipating a slowish countdown to the Jay Powell speech, which is at 3 p.m. UK time a little bit later on. The market's going to be cautious into that. However, that said, there are some single stocks which are really significant this morning. There's one out of Poland, but there's definitely one out of Vevey, Switzerland. So let's take you down to the shores of Lake Geneva and figure out what is happening there. Schneider is out, Brex is in, you've got a new CEO coming in. I say in, he is an existing candidate that has come from within the company, and therefore there are questions about whether or not existing targets are continued or whether or not ultimately they get changed. The signaling seems to be, at this point, Critty, that maybe actually we wait until the Capital Markets Day and then maybe we do see some changes. And the market's reacting quite violently to this.
It is, and I'm curious how much of that is because they're maybe not. Is it that they're expecting continued pain? Are they expecting that he's a company veteran? Is it, are we expecting that this has been an ongoing story for a year?
As a result of this? Because at the moment, the trajectory this year has not been a good one.
Yeah, and it's one that the markets aren't diving into very well. Let's get another voice on this. Bloomberg's Dasha Afanasieva, our consumer goods reporter, is, of course, following this story. Dasha, walk us through this. We're seeing red on the screen. Are the markets just disappointed by the pick? What's the thinking here?
I don't think that the markets are disappointed by the pick, although it is interesting. It's an internal candidate, and I think the feeling was they couldn't go for an external one because Schneider was external, it came from a healthcare company, and actually his healthcare bets within Nestlé really haven't paid off. So they've gone for someone who is more in the image of the CEO before, Paul Bulka, who is now chairman, including a sort of a background in Latin America and a fascination with that region. I think probably the markets are disappointed because of the uncertainty of what happens to targets now, what's the strategy, and the management wouldn't be drawn on that. They just said you've got to wait for the Capital Markets Day, which to me really sounded like there will be shifts because, you know, the guy's been on the executive committee for 16 years. He knows whether the targets are achievable or not. He knows by now, so why not? Just has a sense for it, even if they haven't, you know, if they've done the formal analysis and decided that they were being cut, then they'd have to announce it.
So what is the market, why is the market down? This is what we're trying to understand this morning. Is it an anticipation that we do get cuts, and those cuts could be quite significant? But as you say, he's an internal candidate, so why would he change the cuts? I'm genuinely confused here as to why the stock is down. The commentary on the call this morning seemed to suggest, as you say, the Capital Markets Day is going to be the moment that happens. Is that I can't work out if that's a good thing or a bad thing. A realistic assessment of where this company is right now is one thing. A change in strategy is completely different. I'm trying to understand the difference here.
I don't think there'll be a change in strategy, but I think there'll be a change in targets. probably, and that's what, reading between the lines, it sounds like it is coming, and I think that's the main, on the operating margin target, which, you know, they're trying to grow, and of course there's this balance between reinvesting in brands and having the money to do that, whilst also keeping profitability high, which is particularly important when you're struggling to grow the top line. And I think it's that balance that they're going to look for. And like every CEO in the consumer space says, we're going to really focus on cost, and we're going to then reinvest in our brands. But in practice, how that works, especially with someone who's been supposedly helping Nestle do that in his current role, it's all that uncertainty that the company wouldn't really be drawn on. And I think I was also surprised. I actually think, you know, this isn't a situation where someone was like, you know, on their way out for months and then eventually the company gave in. I think despite there having been 4 quarters of missed guidance, there was still some goodwill amongst some analysts and investors, and a lot of respect for Schneider. So I think that also adds to the uncertainty. And if you contrast it with when the Starbucks chief executive was ousted just last week, and there was a massively positive share price reaction. You know, Schneider has more of a track record.
Dasha, thanks for the update. Really appreciate it. Big story, certainly having a big impact here in terms of the European corporate story this morning. Dasha Afanasya joining us on the Nestle story. We're going to have to wait until November, it seems.
Yeah, I mean, but the stock is down 2%. I'm curious when we do what that new kind of commentary will look like. We're still waiting for some of the analysts who are saying, well, look, this is a man who can actually continue to rebuild the culture as well as perhaps fix some of the pricing. Coming up, we're going to switch gears here. Vice President Kamala Harris formally accepting the Democratic presidential nomination. As we head to break, take a listen to a few of the highlights from the DNC this week.
To serve as your president, I love the job, but I love my country more.
We refused to give up on America. Millions marched, many ran for office. We kept our eyes on the future. Well, my friends, the future is here.
Here's a 78-year-old billionaire who has not stopped whining about his problems since he rode down his golden escalator 9 years ago.
I want to know, who's going to tell him that the job he's currently seeking might just be one of those black jobs?
More than anything else, let us choose freedom. Why? Because that's the best of America. We're all Americans, and together, let's all choose Kamala Harris.
It's the 4th quarter. We're down a field goal, but we're on offense and we've got the ball. We're driving down the field. And boy, do we have the right team.
I accept your nomination to be President of the United States of America.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf, through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
All the while, he intends to enact what in effect is a national sales tax, call it a Trump tax, that would raise prices on middle-class families by almost $4,000 a year.
And remember, what I'm going to do is something that nobody has ever even thought about doing. No tax on tips. For all of you waitresses, for all of you caddies at Doral.
We will create what I call an opportunity economy, where everyone has the chance to compete and a chance to succeed.
Are you better off now with Harris and Biden than you were with a person named President Donald J. Trump? Do you know him? He's a nice gentleman.
Vice President Kamala Harris and Republican nominee Donald Trump speaking in the last 24 hours, talking about what some of those policies might look like. A lot of it being focused on that tax policy, perhaps one that the financial community focuses on how to fund that looming deficit. Of course, that negotiation happening in January. There's plenty more on the docket, though, and a lot of that for our international audience has to do with foreign policy, where we're still trying to put the pieces together on what a Trump 2.0 or a Kamala Harris presidency may actually look like for the rest of the world. Joining us now to discuss that very topic, Roberta Haar, professor of foreign policy analysis and transatlantic relations over at Maastricht University, joins us this morning. A pleasure to have you on the program. Let's start there. It feels like with Kamala Harris's formal acceptance of the Democratic nomination, there's still a lot of concerns about what she might actually change when it comes to foreign policy. Your take, is this just the status quo?
Well, first of all, thank you for having me on your show. I do think that it seems that Kamala Harris will very much follow in the footsteps of the Biden administration, which has, for Europeans, feelings of, I would say, both darkness and light. Certainly the light has to do with the very strong statement she made about leading, making sure the United States will lead a global order, will support her allies, will support Ukraine. But I think the darkness has more to do with the economic policies that the Biden administration has enacted that have not always set well with Brussels.
Well, give us some of those examples. I mean, I think there's been a conversation as well that U.S.-UK relations have been strained as well. There's been a tariff conversation that's been looming, especially in the steel story, that's been put on pause. What does that look like in a Kamala Harris presidency?
Well, I was thinking more about the arguments they have for technology, that she will continue to make sure that the U.S. is competitive economics that are advocated by the European Union. I think those are the things that will be more uneasy for Europeans.
So, Professor, the reshoring continues, the CHIP Act continues, the Inflation Reduction Act, that kind of industrial policy continues. How does Europe respond to that?
Yes, I think, yes, indeed, those protectionist policies will very much continue. How does Europe respond to that? Well, I think that they've had difficulties in responding to that. I think they probably will also have their own protectionist measures. I think that Macron has also said that this is sort of rebooting or re-triggering how multilateralism will work in the future. No, I think that Europe will have difficulty in responding to these measures.
So in terms of what changes, what does change? Is this Bidenomics 2.0? What does Bidenomics look like in terms of the improvements? Because Bidenomics has really caught Europe on the hop. We've been happy over here that we have seen a more manageable relationship, but we found it very tricky to deal with the industrial policy that has been delivered at the center of Bidenomics. What does the transition from Bidenomics to Harrisomics look like in terms of the way that this story is going to progress? Are there going to be significant changes? Is Europe going to find it easier or harder? Where are the key areas that I should be looking?
Well, of course, we don't know yet. We don't know, and we haven't heard a lot of policy specifics from Kamala Harris. But we do know, maybe a positive thing for Europe is that she has been very critical of the trade war, especially how Trump started the trade war. And this, of course, affects European exports as well. So this could mean that she changes aspects of the trade war while still doing very much for investments in the U.S. sector in emerging technologies.
Well, Roberta, let's talk about that trade war a little bit. I mean, I know we're talking between the U.S. and Europe, but I'm curious, as the one piece of consistency between President Trump and President Biden has been being a tough president on China. It's likely to continue again under Kamala Harris if she were to be elected, certainly under President Trump if he were to be elected. What is Europe's role in that dynamic? The last time we saw this under the Trump era, it felt like Europe was playing a more diplomatic role, getting caught in the crossfire. But now I'm curious, does that kind of sway Europe more to the U.S. side?
Well, certainly the rivalry with China has been something that Europe has had difficulty in dealing with. First of all, they did things at the beginning of the Biden administration that the Biden administration wasn't so pleased about. But they have realized that and has in the meantime viewed China as also a strategic rival. And these things are more in line with U.S. thinking. Of course, if the West wants to have any strong response to China and China that we want to deal with better in the future, it has to work together. And I think that we'll see how Harris will work together with the Europeans. Sorry, I'm feeling a bit nervous now.
Don't be nervous, believe you me. Roberta, I read a piece in the FT flagging the fact that Philip Gordon, who came out of the Obama administration, backed Obama early, has been a key person that Harris has turned to in terms of foreign policy advice. You've got your ear to the ground. Who are people talking about in terms of who she is listening to? Who should we listen to because she's listening to them?
Well, actually, obviously, I'm not in Washington, so I don't know exactly the answer to that. But I am assuming that many of the administration officials who are in the current administration will also. These are the experts in the Democratic Party dealing with foreign policy, dealing with China. I'm assuming that many of them will also stay within her administration. People like Kurt Campbell, Michelle Flournoy, Rush Doshi, who's now left the administration but still working at the outside in think tanks. I think that many of these same people who had been advising Biden on foreign policy and how to deal with China and really viewing China as the strategic rival of the future, I think they will also still be in her administration.
Roberta, we're going to leave it there. Thank you very much indeed. We greatly appreciate it. Fantastic. No need to be nervous. Roberta
Thank you very much.
Professor of Foreign Policy Analysis. A great pleasure. Joining us from Maastricht University. in the southern Netherlands. Okay, let's talk a little bit about what is happening. She mentioned Emmanuel Macron, so let's talk a little bit about what is happening in France. France's president will begin negotiations with party leaders today. This is the kind of the starting of the process. This is after the hiatus of the Olympics. They're trying to figure out who's going to be the prime minister. Remember, Macron effectively lost control of Parliament. That snap election which caused so much volatility. The French leader is going to start talks at the Elysee today. I think the main focus is going to be on the conversation around the new Popular Front, which won the largest number of seats, still short of a majority. But most of the major parties are going to be involved in this process. And this is critical, because we just had a conversation about kind of what is happening in the States. If Harris were to win, what that policy would look like, and particularly on the industrial policy front, what that would look like. How Europe was responding is really difficult to determine at the moment. Macron's all at sea. We don't know what's going to happen next in France. Germany's in a similar kind of situation at the moment. The coalition is fragile. It's really difficult to understand where the momentum comes from within Europe to compete with even with a Harris camp, let alone what happens with the Trump camp. I wonder whether a Trump win would actually bring Europe together and maybe give a little bit more of a go forward in a sort of crisis situation.
I mean, it would in a defense perspective. We're already seeing that when it comes to NATO, when it comes to the conversations happening in Brussels, where we are actually seeing a little bit more, I think unity is the wrong word, but a little bit more kind of have their act together relative to France and Germany. I think a great example of that is just what happened during the Olympics, and that even with some of the security threats, some of the security situations, one of the concerns in France was that the government isn't put together enough to be able to quickly react to something like that. I also think it's important to talk about what those deficit conversations look like. September 20th, France has to put forward what their budget looks like to the EU and comply with some rules, and that's going to be tough, and the markets are going to react.
How long is this process of government forming going to last? Can we get a candidate? Could we get a candidate? There's a number of names kind of floating around the halls of power in France right now that would pass a vote of no confidence.
Yeah.
Such a fragmented parliament. Can somebody gain enough votes to pass a vote of no confidence and therefore continue in role rather than seeing another bout of volatility?
Yeah.
Again, is this all just a prelude, though, to another French election? Because it is so fragmented as well. We're just in that period now. We're just going to have to wait for another French election to provide clarity. And does it provide clarity?
And in the meantime, what is Marine Le Pen doing in the background? It kind of feels like doing push-ups. She's already feels like cleaning up her party a little bit in terms of some of the rhetoric that's coming out of it.
She's getting ready for that election.
Absolutely. And especially because, and we remember this, that in the initial kind of run-up, in the initial snap elections, she was doing a lot to court the business community and to court the fact that the right is just as competent as the left and the center to make those deficit negotiations viable for the rest of the market.
Is she waiting for chaos on the left in order to make her case in that potentially quite soon to come election a year out? Like, is she basically waiting for? Does she want a year of almost chaos in France to make her case?
I think
that's not good for the markets.
No, it's not. And I was going to say we're already looking at 72 basis points on that spread between the French and German debt. Some folks saying go as high as 90, if it goes to even as high as 100, you have a problem on your hands. Absolutely, but we're not. I think the sense seems to be that we're not going to gain any clarity, at least in the near term, as to kind of what that looks like. And this is a key point of power at the heart of Europe. Anyway, we're going to continue to watch that. We'll bring you some pictures. We'll get our Paris bureau chief on in the next hour. We'll keep you updated on what is happening here as those talks kind of start, kind of circa 9 o'clock here in London. We'll get you some live pictures as well, people going in and out of the Elysee a little bit later on. We're also going to bring you a lot of live pictures from Jackson Hole a little bit later on. We are, of course, waiting for Powell, investors bracing for the Fed chair. He's going to be speaking later at Jackson Hole. We've got some great coverage lined up, some pre-market, some post-market game analysis coming from the team at Jackson Hole. A special coming up here on Bloomberg Television. Looking forward to that coverage. Anyway, we'll talk more about that next as well. This is Bloomberg.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
DOJ or other authorities
could face bigger challenges next.
was going to keep reading World Cup. This is a three
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Liftoff in a flying taxi without a pilot. This bubble-like automated vehicle is made by EHang Holdings. It's vying to become the world's first uncrewed commercial flying taxi this year. While flagging a cab isn't going away anytime soon, the potential market for these next-generation rides could be massive. According to Morgan Stanley, it's a market that could be worth $1 trillion by 2040. And while questions remain over the sector, if that prediction is anywhere near close, in not much more than a decade, the world could be spending more on flying car trips than it currently does on conventional air travel.
Okay, so that's a flying taxi. That's one thing. A flying taxi. So I would, but I don't think a lot of people would. The AI. So basically, and we put a reporter in one of these things. You go up. There's no pilot. You're just sitting in this thing. It takes off. It goes wherever it's going to go. It lands, but you have no control. Like this is. We talk about sort of Elon Musk wanting to get Teslas to be robocabs. Like this is a flying version of a robocab. Do you want to? Is everybody ready for this? In some ways, there are kind of maybe less things to bump into, but.
There's a lot of like bird jokes to be made there, but I gotta say I've got my feet on the ground. I'm
okay,
scared
so you
of this.
wouldn't.
I would not. I don't think.
If there was a pilot, would that make a difference?
Yes, because I also wouldn't do autonomous cars. Like that to me is also a fear. I'm not there yet. And I think I share the public sentiment, by the way, when it comes to things like autonomous driving. There's a lot of concern around that. It hasn't been fully regulated. This is a longer conversation, but we should probably stick to the cars topic.
Well, let's transition to the cars topic and talk a little bit about what's happening with BMW and Tesla. BMW is now ahead of Tesla in terms of leading the European electric vehicle sales story. It has a lot more cars, so Tesla's only got a relatively limited lineup in terms of the vehicles. As you can see there, there's lots of BMWs out there. So maybe this is just a kind of aggregate story that we need to talk about. Craig Trudell joins us now for more Our Cars Are. Morning. Is that, how indicative, how useful a kind of indication is it that BMW is now doing better than Tesla?
I think it's a fascinating story because just a few years ago, there was really a concern about whether a sort of, one foot in strategy for BMW was ever possibly going to work for them. A lot of manufacturers were putting more emphasis on, dedicated platforms, purpose-built for electric vehicles, whereas BMW was in this camp of flexibility where they would take combustion engine car platforms and build them as electric versions, plug-in hybrid versions, or just, your typical gas versions. And a lot of people told the company this is the wrong way. Interestingly, they're going to, be moving off of the approach that they've taken this new class platform that they're bringing to market starting next year. So, they're really, now we're seeing momentum in terms of their ability to scale up their EV business, and they're going to have this added benefit of having, spent time, effort, and not necessarily rushed in with full EVs, really, done so in a concerted way. And can they make the transition, starting next year in a smoother way than we've seen a lot of their competitors? Yeah. They tried to sort of, jump with both feet, and they really have not succeeded. So, it's very interesting to me that they've been able to pull this off, even with that caveat that, yeah, they have a much broader lineup than Tesla has.
Can you walk us through the pricing of all this? It feels like in the States, EVs are more expensive to make, they're more expensive to market. There's a whole supply chain story of how they get access to the chips involved, not to mention the raw materials and, of course, the labor as well. But it feels like some of those challenges aren't as challenging in this part of the world, which would affect the pricing. So why is this only happening now and not earlier?
Yeah, I think, BMW gets a lot of credit for being a very well-managed company that, doesn't necessarily tell its story that well, but sort of, under the surface is really, one of the companies that you don't see make big mistakes. And so you've seen other manufacturers, again, make a lot of noise about their electrification strategy, not be able to execute. BMW is sort of known for being able to execute, and so I think they really did try to make a big push with the i3. We're now talking roughly a decade ago. Yeah. That didn't go so well, and I think they learned a lot from that process. Recalibrated, decided to make this approach of we're going to give everybody a little bit of everything powertrain-wise. And I think it shouldn't be overlooked, too, that they do have close ties with some Chinese companies that have surely helped here. Yeah. CATL being one of their big battery suppliers. We're seeing, in terms of the progress, we're seeing bringing battery costs down, which thereby allows for making EVs more affordable. BMW is able to tap into that by having, been a close customer of CATL's for years now.
Well, certainly something we're going to be keeping an eye on, and really what the future of Tesla looks like. It's a fascinating one. Of course, how Tesla shares trade when I think the pre-market opens in just about 9 minutes or so. So we're going to keep an eye on that. In the meantime, let's go back to our top story here. Of course, all eyes are on what happens in Jackson Hole. Jerome Powell may shed light on the Fed's rate path in a highly anticipated speech out of Wyoming later today. The biggest question remains, will the central bank cut at its September meeting? Bloomberg's Michael McKee has the preview.
All Wall Street wants to know, how far will he go? Investors would love a rate cut pledge from Chairman Powell. That's not likely. He's also unlikely to say how far the Fed will cut or what their next steps will be. Instead, expect acknowledgement that the Fed is close to changing rates as long as the incoming financial data meets forecasts. He still has to get some of his colleagues on board.
This mandate on the inflation side is really important. I think we seem to be getting some really good movement that direction. But before we act, at least before I act or recommend acting, I think we need to see a little bit more.
Kansas City Schmidt can't define how much a little bit might be, but for Wall Street, Powell just raising the subject may be enough. There's also interest in how much he might talk about the Fed's framework review, which the central bank begins to undertake this fall. The transmission of monetary policy is the topic of this year's symposium. Michael McKee, Bloomberg, Jackson Hole, Wyoming.
All right, so what does that transmission mechanism actually look like, and how do the markets price it in? Let's ask Bloomberg's managing editor for FX rates for the U.S. and EMEA, Rachel Evans, joins us around the table here. So September seems to be telegraphed quite clearly, 25 basis points. It's in the books. What happens after that? Do we see any signs of what the game changer might be for November, December?
Yeah, I mean, the market at the moment is seeing roughly 100 basis points of cuts through year end, 95 at the moment this morning. So that implies that we're going to see them cut every meeting between now and December, and one of those cuts will be supersized, will be with 50 basis points. And then after that, through about this time next year, we're expecting to see another percentage point of cuts. So the market is pretty aggressive. They're seeing 2 percentage points of cuts between now and a year's time. That is a lot. So when we're going into Jackson Hole and thinking about what Powell can say, I think the market is going to be very, very focused on how aggressive Powell seems like he wants to combat any weakness in the labour market. He's made it very clear that jobs, labour is going to be a key thing that they look at for deciding when to cut and how aggressively to cut, having kind of broken the back of inflation already. So I think the market is going to be looking to see just how fighting he comes out, what sort of language he is using about how he sees the state of the labour market. Because to be clear, we've had some very conflicting pictures of the health of that market.
What I can't figure out is how investors respond to a 50 basis point cut were we to see one. And the market pricing kind of signals that we are going to get one, as you say. Is it the Fed knows something that we don't? The economy is going downhill pretty fast. They need to front load. They need to be aggressive. That's bad. So that's bad for risk assets. Or is it actually they're just being careful? They want to make sure that actually any tick up in the labour markets and stress that we're seeing, they can handle. They're going to manage it. It's non-linear generally, that pickup in the labour market where you see unemployment rising. We're going to get in front of that. We're going to deal with that. What are you hearing? What are people saying to you about kind of were we to see a dovish Powell today? How does the market respond to that?
I think if you see a dovish Powell, I think you get a huge rally reignited in the bond market for starters.
Yep.
I mean, we saw just how sensitive that market was, just obviously very, very price conscious of exactly what happens in rates back in early August, right? We saw some data come in that was starting to question the health of the US economy and just how quickly bonds rallied off the back of that and how quickly stocks
But isn't the bond market already pricing? You're saying it's 100 basis points.
Yeah.
And that sounds like he needs to be dovish to justify that pricing.
Yeah, but I don't think that is necessarily in the actual treasuries market itself at the moment.
Okay. Yeah.
So I think that's where you'll see kind of that rally. We saw things kind of really yields starting to inch back up after kind of like falling to their nadir in early August. I think that is where you're going to see that kind of articulated again if we do see Powell coming through and being dovish. I think though the risk is probably on the other side. I think probably Powell is going to be more hawkish than perhaps markets think. They don't want to provoke panic. They want to be seen to be on top of things and moving towards cuts. But I don't think they want to stress that things are deteriorating, give the impression that they are behind the curve. So I think the risk at Jackson Hole is that Powell actually comes. Powell comes out and says, you know what, things are okay. We'll cut. We're going to cut. But it's not like everything's falling off a cliff immediately.
Okay.
Rachel, I'm going to put you on the spot here. 30 seconds. Dollar weakness. It feels like it's really a function of that kind of dovish expectation out of Powell. You're seeing 131 on cable, 111 on euro. When does that snap back?
Yeah, no, I think that the question mark about exactly how far it can snap back remains. I think the dollar weakness thing, that is what you will also see, Guy. If we do see more dovish Powell, dollar could fall out of bed. But at the moment, it's been trending down very gradually. Yes, you're seeing those highs in pound and euro, but I think that would be the kind of like sort of pain point potentially for markets if we do see a far more dovish Powell.
It's going to be an interesting afternoon.
Yeah.
I'm definitely going to be paying attention. Rachel, thank you very much indeed. Bloomberg's managing editor for FX and Rates, US and EMEA. Rachel Evans, thank you very much indeed. Stick with Bloomberg. I'm going to be tuning in. Believe you me, we've got some great coverage coming up. Fed Chair Jerome Powell's speech, Jackson Hole, at the Economic Symposium that is taking place there today. We've got a special coming up. We've got some great guests as well. Atlanta, Philadelphia, Chicago Fed President is going to be joining us. Esther George is going to be joining us, formerly of the Kansas City Fed, of course. The surveillance team are there. They've got some great coverage. It starts at 2 p.m. UK time. Midway through that, we are going to get the speech. We'll cover all of that. As the countdown continues, I'll take you through the pulse. That's the next hour. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
European stocks edging higher. Investors, though, waiting for Fed Chair Jay Powell's speech. Jackson Hole, that's coming up a little bit later on. We have a Bloomberg special, 2 p.m. London time. That's when it kicks off. Powell's going to speak circa 3 p.m. The yen climbing as a hawkish BOJ governor signals that he won't back away from hiking rates. This is Japanese inflation for July comes through hotter than anticipated. And Vice President Kamala Harris formally accepts the Democratic presidential nomination, making her case against Donald Trump and vowing to fight for the American middle class. Let's take a look this morning at what we're seeing in terms of European assets. A little bit of green on the screen. There are some stocks that stand out. Nestle is certainly one of those, and that's why you're seeing the SMI right here under a little bit of pressure, down by 0.3%. But let me take you through some of the other cross assets that you need to be thinking about this morning as we count you down to Jay Powell. US futures pretty flat. We're up by 0.3%. The US 10-year pretty becalmed as well. We're waiting for Powell. Is he dovish? Is he hawkish? Could get a big reaction either way. Dollar yen. You did see the governor of the BOJ coming out. He was delivering testimony to Parliament a little bit earlier on in Tokyo. Cautious but hawkish, I would say, hawkish. So he was definitely on the hawkish side, but reasonably cautious. Obviously, we've got politics in Japan getting in the way, maybe of the BOJ, and we're, of course, watching what is happening with Jackson Hole. He was probably mindful of that going into this. The stock I really want to highlight is Nestle. It is down. We have a new CEO coming through at Nestle. The market a little bit surprised by that. We're wondering whether or not Nestle's financial targets are going to be tossed out in November when this company has a new capital markets day. So there's a lot going on this morning. The main event definitely is Jackson Hole. We are counting you down to that event. So let's get into what we need to be talking about.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Guy Johnson. I'm not Francine Lacqua. She is out again today. But let's talk a little bit about what's going on right now. We are counting you down to Jay Powell's speech, circa 3 p.m. UK time, a little bit later on. Will he shed light on exactly what the Fed's rate path is going to look like? This is a highly anticipated speech from Jackson Hole, Wyoming, later today. Laureline Chatelain, fixed income strategist at Pictet, joins us now. What are you expecting to hear from Jay Powell?
Good morning, and thank you for having me. So we would expect him to hint at a September rate cut, but we would believe that he would still not say about the magnitude of the rate cut. We believe they will state that they want to be gradual in their rate cutting cycle and probably data dependent. And that means that the August employment report will be key.
Absolutely, which we're going to get on the 6th of September. So we're going to have to wait for that data to figure out exactly what is going to happen here. Do you think the risk, though, is that he's more dovish or more hawkish? You're kind of painting a fairly neutral picture, but do you think the market's trying to work out, and the market has priced the possibility of a 50 basis point hike between now and the end of the year? Do you think he hints at that being kind of a possibility still, or do you think he takes it off the table?
So we believe that in terms of risk management perspective, he cannot close the door again as he did during the last FOMC minute conference, where he stated that a 50 basis point cut was highly unlikely and they hadn't discussed it. So I guess now, given the market movements we've seen early August and the fact that we have for 3 months in a row disinflation that is well on track in the US, he can allow himself to leave the door open to a 50 basis point cut. But we don't expect him to signal that. So in this regard, I would say probably market neutral rather than hawkish.
How many rate cuts do you expect between now and the end of the year?
So in our scenario, we have 75 basis points of cut. So that would be 3 times 25 basis points. And I think you're right, the market is more dovish than us, seeing almost 100 basis points of cut. On this side, we believe that maybe short-term U.S. Treasury yields could be surprised a bit to the upside and move higher into Powell conference. However, when we look at the 10-year Treasury yield, it's now back towards 3.8%, and we believe this is more anchored with the terminal rate, and this one is still around 3.3%.
Is there a danger that the Fed wants to get in front of any labor market slowdown? When labor market slowdowns start to happen, they tend to accelerate and they tend to be front-loaded. And I'm wondering whether there is a thought process at the Fed that it doesn't want that to happen, and as a result of which it wants to take preemptive action. How big a risk is there that we see that happen?
So we believe they could do a preemptive action. For example, if we have the August employment report that comes below 50K, that would not be recessionary yet because we wouldn't have a contraction in the labor market, but it would mean a significant slowdown from the pace we have seen for the second time in a row. We know we've had a significant revision also lately. So in our view, there will be very sensitive to the labor market dynamics. And we have some signs that it's slowing down. So it can go very fast from there.
Let me flip it over to the other kind of side of that story. How big a danger could there be, and how worried will the Fed be that if it delivers a front-loaded rate-cutting strategy, that inflation reaccelerates? The economy in the States is not, as you say, in recession yet.
No, so we have good signs of disinflation, but that's for now mostly on goods. And if we look, for example, at shelter, it has reaccelerated, right, in July. So if there are too dovish in a rate cutting cycle, and for example, we have a boost in housing sales again, because mortgage rates are going down sharply, that's something that could derail a bit the disinflation outlook. So I think they still need to be a bit mindful of the disinflationary forces at play.
Yeah. What I'm really, I guess at the end of this, what I'm really trying to understand is does 25 basis points from the Fed signal a soft landing? Does 50 basis points from the Fed signal a hard landing?
I wouldn't say so. I think if they do 50, they just want to prove to the market that no, they're not behind the curve. They are ready to adjust very quickly. And I think this readiness to adjust will probably calm down market participants because that reduces the risk of a recession because they are acting quickly. So I would say as long as the market understands why they are cutting by 50 basis points, I think the market will take it positively. And you see lately we've seen risky assets performing a bit less well because Fed speeches hint to a gradual rate cutting cycle.
how does the curve react to all of this? How does the US curve, 2s, 10s, 30s, react to this? I can understand that if we are going to get a rate cutting cycle, I'm going to see some action at the front end. But I'm looking at the back end of the curve, 10s, 30s, and I'm thinking, you know what, that is going to be controlled more by what happens on the fiscal front. And I'm looking at both candidates in the United States signaling that they are going to be relatively expansionary. The Treasury is going to have to issue an awful lot of paper, and I'm wondering whether or not the bond market really is ready to take back-end yields down quite sharply.
Yes, I think that will be a key things to watch in 2025, definitely, because we will have all this discussion about extending the tax cuts that were put in place by President Trump. But I think in the next few months, the market is more going to focus on the economic slowdown that we see and the risk with Trump being elected that if he puts in place some tariff, it will potentially hinder the ability of the Fed to cut aggressively if it needs to, because of this inflationary pressure from tariffs. So I see more risk on risky assets, but also on treasuries if we have a Trump victory with a tariff put in place, because then the Fed will probably not be able to cut to 3 or below 3%.
Laureline, what does what Powell says today mean for the ECB, for the Bank of England, for European central banks?
So I think what has been key over the last few months is the fact, and we saw that on the dollar weakness, right, is the fact that because the Fed is now readying its rate cutting cycle, it's going to enable the rest of the central bankers to actually go on with their rate cutting cycle without having the currency depreciating too much. So I think this is very key. And I think in terms of labor market, this is something that is specific to the US. In Europe, labor market is still very strong, but we have lots of weakness in the manufacturing sector. And we are starting to see signs that this is broad-based in, global. We see signs also in emerging markets. So we could enter something of a manufacturing global slowdown.
It feels like, certainly looking at the PMI data out of Europe yesterday, that we're already there. And that certainly was the signal coming out of the headline numbers. But the other thing was that when I read the statements from market on the data that we saw, they're also flagging the inflation risk. And I'm wondering whether or not that is going to be something that the ECB in particular is going to be mindful of and maybe curtails its ability to deliver on those rate cuts, that kind of coordinated rate cutting cycle that you're talking about.
Yeah, I think in terms of disinflation, in Europe, we're a bit ahead. And what we had also this week is good news on negotiated wages for Q2. It came down significantly in Europe, and that was in part due to Germany. So I think in terms of negotiated wages, and that's a key pressure on services inflation, we have good signs. And we know that for now, the services part of the economy is very robust in the peripheral countries where it's due to tourism, and the tourist season is almost over. So I think the path ahead for the ECB is quite okay in terms of rate cuttings. They can go ahead.
Laureline, nice to speak with you this morning. Thanks for joining us from Geneva. Laureline Chatelain, fixed income strategist, joining us from Pictet. Stick with our Bloomberg coverage. We've got some great coverage coming up. Jay Powell speaking a little bit later on from the Jackson Hole Economic Symposium. We're going to start our coverage at around 2 p.m. UK time. I think Powell speaks at 3. We've got some great conversations in the build-up to that and around that. We're going to be sitting down with the Atlanta, Philadelphia, and Chicago Fed presidents. Esther George is going to be joining us. Of course, she's the former Kansas City Fed president as well. You don't want to miss the surveillance special live from Jackson Hole. As I say, that starts at 2 p.m. UK time. We also need to talk about what is happening in Japan as well, or what has happened in Japan. The BOJ governor indicating earlier the rate hikes are still on the table if the Japanese economy meets the central bank's forecasts. Ueda getting a grilling in Parliament a little bit earlier on, but sounding slightly hawkish. We'll find out why next. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We talked about the Fed. We've talked a little bit about the ECB. Let's talk about the BOJ. Its governor, Ueda, telling Japanese lawmakers that the central bank is still on a path to higher interest rates. That's if inflation and economic data continue to match their forecasts.
If we are unable to confirm a rising certainty that the economy and prices will stay in line with forecasts, then there's no change to our stance and we'll continue to adjust the degree of easing.
Joining us to discuss, Bloomberg's Paul Jackson. Paul, what did he communicate? He sounded a little bit hawkish at the margins, but not too hawkish. He's probably mindful of the politics. He's mindful of the markets and the turbulence. He's probably mindful of Jackson Hole as well. What did he say today? What was the message that was communicated?
I think the key message that was communicated is that rate hikes are still very much on the table. Nothing immediate. I think we can take September off the table. There is a ruling party leadership contest, which now that the Prime Minister's vacating his position, partly a victim of the very inflation that the Bank of Japan has helped create. But he also managed to reassure markets and essentially conduct a long 5-hour hearing in Parliament and turn it from a potential grilling that could have been messy into a bit of a procession and a reiteration of the BOJ's policy stance, while also doubling down on the message that the decision to raise interest rates at the end of July was an appropriate move, and also playing down its impact on the market hullabaloo that took place in the meltdown in early August by saying that was mainly down to US data.
I'm seeing local press in Japan talking about the possibility of a snap election. Is that going to keep the BOJ on the sidelines?
Well, it does complicate things if you've got these, political processes underway. Typically, the central bank would avoid doing anything when important decisions about who's going to rule the country or who's going to be the ruling party are underway. I don't think there's any doubt that whoever replaces Kishida would win an election if a snap election was held, but I think still that would be a reason for the BOJ to hold off. I mean, what we're seeing here is the BOJ messaging that nothing's happening for the time being. That would normally indicate, nothing happening for 3 months. So really, late October is our earliest timing for any rate hike. And we do have another election somewhere in the world happening in early November that could be of great significance to markets. So I think perhaps the BOJ would also be a little cautious about making a move then. I think they want to see the dust settle after the US election. And I think if they're going to move this year, which 2/3 of economists think they will do, I think it'll come in December.
If it does come in December, kind of where does that is that part of a process? Is that it? Are we going to see more after that? Where are people saying rates are likely to kind of stall out at? Are we going to 1.5? How high could rates ultimately go in Japan?
Well, you know, compared with other major economies, rates have been incredibly low in this country for decades. So we're not going to see like 5.5% or anything like that. In fact, it's unlikely we'll even get to 2%, the inflation target. In our most recent survey of economists, I think we're seeing the terminal rate for this cycle at around 1%, which may seem incredibly low to viewers abroad, but that still would be historically pretty high for the last 3 decades in Japan.
Paul, really appreciate the time. Thank you very much indeed. Paul Jackson joining us out of Tokyo on what we learned a little bit earlier on from the BOJ. What are we going to talk about next? We're going to talk about French politics. The French President Emmanuel Macron holding talks with his political rivals to break the deadlock in the formation of a new government. Finding a new prime minister, absolutely critical. We've had the Olympics hiatus. Now we get back to it. We'll have the details shortly. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
So, you are looking at live pictures, you will be in just a moment, of the Élysée. The French President Emmanuel Macron kicks off a key political process that is going to unfold over the next few weeks. We've had the Olympics hiatus, but remember, we are now 6 weeks from that snap election. The French president is effectively losing control of Parliament. We start the process today. You're going to see a series of political leaders going up those steps today and into that building as we start to figure out how to form a government in France and how to find a prime minister. Our Paris bureau chief, Alan Katz, joins us now. Alan, what's going to unfold today? How far apart are these parties?
So, as you mentioned, there's going to be a series of political leaders who go to the Élysée today for meetings with President Emmanuel Macron. They're going to go separately, right? This won't be a big group meeting. And in each case, he is going to try to find sort of what is the lowest common denominator of something that various groups could agree on. The answer is going to be not much, actually. But that's the goal. That's what he's trying to find. And this actually harks back to sort of a situation, the way that France used to function before the Fifth Republic, before Charles de Gaulle became president again in 1958 and changed the Constitution. The presidents before then used to hold these kinds of consultations, try to come up with a sort of consensus prime minister, which they would, and that prime minister would usually last for a year or two before things would all break down. So it's sort of similar to, and also it's the way that the Netherlands works now. It's the way that a coalition-style system works, which has not been the tradition in France, but as you mentioned, since he lost sort of control of Parliament with the elections in June and July, this is the only way forward, really.
Alan, Parliament is fragmented, though, and this new Prime Minister, whoever it is going to be to lead the new government, is going to have to pass a no-confidence vote. Are there names that can pass a no-confidence vote?
There are a series of names that have come out in the rumor mill. There's one sort of formal candidate, so what's called the New Popular Front, which is this coalition of leftist parties that goes from sort of the far left France Unbowed through to the more central left socialists. They have a formal candidate. Her name is Lucie Castet. She is the financial director of the city of Paris. And other than that, there have been a series of other names, including Bernard Cazeneuve, who's a former prime minister at the very end of the Hollande administration, a guy named Xavier Bertrand, who's the head of the northern France region, who comes from the Republicans, a guy named Michel Barnier, who viewers might remember as he was the EU commissioner who negotiated a lot of the Brexit deals, or tried to negotiate Brexit deals with the UK following that vote. So there are a series of names out there. Whether any of those are the people that Macron picks is another question, and whether you can get sort of consensus is really a good question.
Alan, we'll look forward to ongoing updates as we watch this process unfolding. I think it's going to be an interesting one to watch. Our Paris bureau chief, Alan Katz, joining us there. We're going to stay with politics next. Kamala Harris taking centre stage at the Democratic Convention last night. We're going to figure out what happens next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that, have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. Welcome back. You're watching The Pulse. I'm Guy Johnson in London, in for Francine Lacroix. Let's talk about the top stories this morning. European stocks edging a little higher. Investors are waiting for Fed Chair Jay Powell's key speech at Jackson Hole a little bit later on. Bloomberg special coverage begins at 2 p.m. London time. The yen climbs. It's a hawkish BOJ governor signals that he won't back off from hiking rates. This is Japanese inflation for July comes in hotter than anticipated. And Vice President Kamala Harris formally accepts the Democratic presidential nomination, making her case against Donald Trump and vowing to fight for the middle class. Let's talk about that story in a little bit more detail. She's done it. She accepted the nomination. It was a very slick DNC, you could argue, and Harris concluded it by laying out her vision for the country. She also warned about the possibility of the damage that could be caused if former President Donald Trump returns to the White House.
I promise to be a president for all Americans. You can always trust me to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
Kamala Harris speaking in Chicago last night, concluding the DNC, reaching out to Democrats, but also clearly reaching out to the middle, the center, where this election in November is ultimately going to be decided. Bloomberg's Vonnie Quinn joins us now. Vonnie, let's talk about what we got yesterday. She proposed herself as a leader for all Americans. She talked about unity a great deal. What were the key messages that came across in this acceptance speech?
Yeah, exactly, guys. She had a couple of jobs to do last night. She had to convince voters that she's more than just an alternative, a younger alternative to Biden. And she had to pique the interest of those that might be tuning in for the first time, might be wondering, who is this Kamala Harris, who is vice president, obviously, but we don't know all that much about her. So she gave a little bit about her biography, the fact that she was a child of immigrants, the fact that she became a public prosecutor. And that's where she began the argument that she should be the next commander-in-chief, the next president of the United States. So there was a lot of appeal, vibe-wise, as people say these days, to move past, and I'm quoting now, the bitterness, cynicism, and divisive battles of the past. And then there was a little nod to some of the campaign promises that we've heard already and that we're likely to hear much more about in the near future. She concentrated on opportunities for the middle class. We've heard about that. Reproductive rights was a big one in the speech. Civil rights and voting rights, very dear to her heart and to the theme of this convention, right? The protection of democracy. And then she also talked about the border and immigration control. President Trump was at the border yesterday. He was at the Arizona border, and he classifies her as being very fragile in that area. He talked about the border to the south and to the north today, so we know that she wanted to come back on that. And then she also spent quite a bit of time talking about international issues. She talked specifically about Israel-Gaza. We know there were tens of thousands of protesters around Chicago this week, and she wants to appeal to a broad swath of voters, not just the ones that are already in the Democratic camp.
Vonnie, just talk about that Trump reaction in a little bit more detail. How are the Republicans responding to what they've just seen in Chicago? A few weeks ago, this was going to be a dismal affair. This didn't feel like it had any momentum, but last night it concluded with momentum.
Yeah, I mean, the last 3-4 weeks have been just stunning in its reversal. Right after the assassination attempt of President Trump, the limelight switched once Biden tweeted out that he was no longer going to be on the ticket. And really, the Democrats have done a great job in controlling the narrative since then. Donald Trump actually called into Fox News right after Kamala Harris's speech and essentially complained about her. He said that she hadn't talked about housing, for example. She hadn't talked about other issues. He said that the room looked good. He obviously had an appreciation for the aesthetic and for the show that the DNC put on, because let's face it, you know, on the final night they had Pink, they had the Chicks. There was a big show and it was very well oiled. Slick, as you said, is the word for it. But he also basically said that she talks a lot, but she doesn't do a lot. And we'll likely hear a lot more in the coming days as to that. As for Kamala Harris herself, today, Friday, she leaves Chicago around 3 p.m. Central Time and will go back to Washington, D.C., because after all, she is still the vice president. But she told her supporters and her donors, essentially, at an after party that there were 75 days to go, and after this celebration on Thursday night, that there was a lot of work to be done. And that's been a theme as well throughout this week.
Yeah, President Obama making that point very clearly. It's going to be a tough battle. Vonnie Quinn, thank you very much indeed for updating us. Let's get more on the reaction to what we've seen at the DNC. John Scardino, who is the UK Vice Chair of Democrats Abroad. The Democrats Abroad is the official Democratic Party arm for the millions of Americans living outside the United States. Good morning, John.
Good morning. Thanks for having me.
Did she stick the landing?
Yes, that's a good way of putting it. I think she did very well. We've been very fortunate. Things have gone well, as was just said. It's unusual to have this kind of momentum before the convention. Typically, a candidate gets this kind of buildup after the convention. So my expectation is that will continue as it traditionally does after the convention.
So you don't think this is the high point in terms of the kind of polling momentum that we've been seeing?
Yeah, I think she's still got a little ways to go. Now, having said that, there's 2 months left to go in the campaign. We've got a debate coming up on September 10th, assuming that Donald Trump sticks to the agreement. And then there's another debate with the vice presidential candidates, Walz and Vance, in October. As we've seen, anything can happen in those debates, so the performance of either candidate could move things one way or another. But for the most part, what I expect to see, as far as the polling is concerned, is she'll continue to get a little bit of a bump upwards after the convention is done now.
The things that are concerning Americans at the moment are inflation, immigration. These are the kind of key areas that the Republicans have been focusing on as well. Do you think she's strong enough yet in those areas?
I think she is strong. She has a good base to build from, and she's getting stronger. I mean, let's be honest. It was a good speech last night. There was not an enormous amount of detail in there about policy. It's fair enough. I think you're going to see more of that over the next few weeks. She did give some of her economic plans before the convention, talking about her support for first-time home buyers, for the tax breaks for families. So she's looking at ways that you can help the middle class. And there are specific hotspots within the economy. I think there's certain things that no president can do much about, but what she's looking at is the overall household budget. So if you're spending a lot of money, for example, on prescription drugs, the Biden administration has done something about that, and she will continue to do those kinds of things. I think somebody said her policies are likely to be evolutionary, not revolutionary.
So is she a continuity candidate? Is that how we should think about her?
I do think that she is.
Because Bidenomics has struggled to have traction in America. The economy's done relatively well, but it hasn't translated into polling numbers.
It hasn't, and I don't know whether that's not coming out in focus groups or why that is, to be honest. I mean, there is sort of a dark art here of figuring that out, to be honest. But I do think she has some very solid plans to address some of the things that people are concerned about. And like I say, the overall family budget, whether it's household expenses, your mortgage, or particularly if you're a first-time home buyer, or if you're raising a family, those kinds of things that she knows that she can do something about, I think that's where she's planning to focus her attention.
If I'm an independent voter and I'm listening to the speech that she delivered last night, what did I hear? What should I have heard?
You heard somebody who grew up in the middle class but had a very tough time of it, being raised by a single mother, but did very well, worked her tail off, successful in becoming the Attorney General of the biggest state in California, biggest state in the country, then a successful senator, and then chosen to be vice president. So she's had some great experience for the last 3.5 years or so with Biden, and I do think she'll continue some of those policies. But I do think this will be sort of, as we said, evolutionary and not revolutionary, that there'll be some fine-tuning of those to get more out of them that is appealing.
Why am I picking her over Trump? Why, if I'm sitting in the middle, I'm undecided, don't know which way to go.
Yeah. Well, for one thing, I mean, we've seen the Trump administration, and it was not very successful.
But if she's the continuity candidate, we've seen the Biden administration as well.
But I'm saying that the Trump administration was very erratic. When you look at some of the opportunities he had, a bipartisan group of senators and congressmen came to him with a plan laid out for an enormous infrastructure plan that would have easily passed Congress, and Trump just dismissed it altogether. Could have been an easy win for him. Biden came along, put that in place, got a lot done, created millions of jobs, and fixed roads and bridges in all 50 states. So that's the kind of difference I think that you would see. Trump is very erratic, very unpredictable, and doesn't seem to be very focused on the American people. Kamala Harris very much is.
Okay, I'm no longer an independent voter, I'm a European. I'm looking at what I've seen over the last few days, and I'm trying to understand what it ultimately means for Europe. You talk about kind of the continuity in economic policy. Europe's been blindsided in some ways, not by the foreign policy of the Biden administration, but by the domestic roads and bridges, infrastructure, CHIPS Act, IRA, these kinds of stories that I think Europe has not anticipated and struggled to deal with. Is it more of that? Is Europe going to, even with if Harris in the White House, is that going to continue? Is that something that Europe is going to have to ultimately still come up with a response to?
Well, I think Europe has got to go its own way. I have to be honest with you. As a member of the Democratic Party and as a representative of the party abroad, foreign affairs are not something that I'm.
No, but you talk to a lot of people on this side of the Atlantic. I'm wondering what they're telling you. Yeah. If you are that representative, what are you telling them in terms of what they should be expecting? Is it more of the same? Is it more spending like we've seen under the IRA? Is it more of that build-up, that reshoring, that infrastructure development, that supply-side story that we've seen the Biden administration delivering? Is that something that we should be expecting again to be part of the Harris administration?
I think to a certain degree, yes. I think that Biden did a very good job of focusing on rebuilding American manufacturing. He's done that with the CHIPS Act, as you say, and a number of other things. So I think that you could expect to see more of that. Now, it just interestingly, talking about European views, there was a poll, and take any poll that you want, it'll say almost anything, really. But there was a great poll recently that showed Harris ahead by 51% over Donald Trump at about 28%. I mean, an extraordinary margin. That was a poll done by the Evening Standard of the British population. Of course, they don't get to vote in this election, but it was an interesting indicator of where feelings are in the UK.
John, great to catch up. Thank you very much indeed for staying up and talking to us. I imagine you saw some of the speech last night, early morning. John Scardino, UK Vice Chair of the Democrats abroad. Democrats abroad and aboard. Thank you very much. Okay, talking of change and leadership, we need to talk about what's happening at Nestle down in Vevey. A CEO shake-up, certainly stirring the stock, but not in the way in the consumer goods company maybe was hoping for. We'll talk about what is happening down on the shores of Lake Geneva. We'll focus on that next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Today, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Stay tuned for a special episode of Surveillance today at 9 a.m. Bloomberg, context changes everything.
Liftoff in a flying taxi without a pilot. This bubble-like automated vehicle is made by EHang Holdings. It's vying to become the world's first uncrewed commercial flying taxi this year. While flagging a cab isn't going away anytime soon, the potential market for these next-generation rides could be massive. According to Morgan Stanley, it's a market that could be worth $1 trillion by 2040. And while questions remain over the sector, if that prediction is anywhere near close, in not much more than a decade, the world could be spending more on flying car trips than it currently does on conventional air travel.
Ollie Crook, on flying cars, flying taxis. Would you go in one? No pilot? That makes quite a big difference. It's interesting, a lot of people are concerned about robo-cars, robo-taxis, i.e. something looking like a Tesla but with no driver. What do you think about flying one? Anyway, that's a subject for another day. You can find that great package online. Let's talk about one of the stocks that is definitely on the move this morning, and that is Nestle. The shares are in the red in Switzerland on the SMI. This after the consumer goods giant announced that Laurent Fricks is going to replace Mark Schneider as the CEO of this business. Bloomberg's Dasha Afantsieva joins us now to give us a take on what is happening here. Dasha, was this a surprise?
It was a big surprise, I think, for a lot of people. Yes, it's true, Nestle's had 4 quarters of missed outlook. But really, it's, Schneider's got such a big track record, and he was also expected to be at 3 public events next week, including a Barclays fireside chat that was promoted hours before this announcement came up. So both in the broader scheme of things and in the practical question, it was a surprise. But apparently internally, morale was bad, so maybe not as much of a surprise if you work at Nestle.
The Fricks is an internal candidate. What do we know about him? How different is Nestle going to look like under his leadership? What does he bring that he's had in his past to the table? Is this a different CEO or a continuity CEO?
I think they want to emphasize that it's a continuity CEO, and this is somebody who's been around for almost 4 decades in the company, including 16 years as leadership roles. But I think they want to focus on going back to the core and the execution, and they've deliberately not gone for an external CEO like they did with Schneider, because they want somebody who understands the culture of the business. It's very unique. It's very Swiss. It's quite particular in how it operates. Some say quite slow moving. And he's going to be somebody who gets people motivated again, who gets morale up, and who focuses on the core rather than some more experimental tactics that Nestle has employed in recent years, which haven't always panned out.
Are we going to see a change in targets? It's been a tough year for Nestle. Are we going to see some of these targets that Schneider put out there being downgraded? There's a Capital Markets Day coming up in November. Is that the moment I should look forward to?
Absolutely. I think that is very likely. If nothing else, that the share price reaction speaks of, a market that looks at Nestle and says, yes, things have been bad, but maybe not so bad. So is there more bad news to come if they decided to change CEOs? And if you look at the more recent lessons that Unilever can teach us, when Alan Jope 5 years ago came in as CEO, he didn't want to change the margin target and throw everything out that his predecessor did, and he came to regret it because there was underinvestment in Unilever brands, and as a result, the top line didn't grow as much. And I think it's wise to look to that example and to really focus on a longer term tactics in terms of recovering the top line and then eventually also recovering profitability.
Dasha Afanasieva, thank you very much indeed. We'll keep an eye on the stock. We're going to keep an eye on that key date in November for Nestle. Another key date is coming up a little bit sooner than that, and that is going to be Jay Powell's speech, the much anticipated Jackson Hole speech that he's going to be delivering a little bit later on. We'll talk about what's going to be the market reaction to this. What's at stake? How are we set up? What are we looking like going into this? We'll talk about that next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating while
This is a three.
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
All Wall Street wants to know, how far will he go? Investors would love a rate cut pledge from Chairman Powell. That's not likely. He's also unlikely to say how far the Fed will cut or what their next steps will be. Instead, expect acknowledgement that the Fed is close to changing rates as long as the incoming financial data meets forecasts. He still has to get some of his colleagues on board.
This mandate on the inflation side's really important. I think we seem to be getting some really good movement that direction. But before we act, at least before I act or recommend acting, I think we need to see a little bit more.
Kansas City Schmidt can't define how much a little bit might be, but for Wall Street, Powell just raising the subject may be enough. There's also interest in how much he might talk about the Fed's framework review, which the central bank begins to undertake this fall. The transmission of monetary policy is the topic of this year's symposium. Michael McKee, Bloomberg, Jackson Hole, Wyoming.
Without his cowboy hat. Always disappointing. Mike McKee joining us from Jackson Hole there. Let's get some insight into how the market is set up going into that key speech from Fed Chair Jay Powell. We're joined by Bloomberg's Ven Ram. Ven, I'm kind of wondering what the setup looks like here, and I'm trying to figure out how we should be reading this speech. The market's got 100 bips price between now and the end of the year. That implies probably a 50 basis point cut at some point. If he doesn't confirm that, do I see that as being a hawkish speech?
It'll be a pretty hawkish speech, as the markets will read into it, Guy. If you're looking for a cowboy hat, though, it's not coming from Powell. That much is clear. Look, what have we done in the markets in the space of this quarter? We have gone from 4.75 on the two-year yield to below 4%. The markets, the idea for the Fed is that they are going to take rates to less restrictive levels, but they are not going to go out of their mind and start cutting rates by a whole lot. That's not the idea. They are not in a position, or they are not yet in a position where they want to accommodate the economy. So the idea is just to take it to less restrictive levels, which means gradual and a measured pace of reduction. And that's what the markets are not getting. As you mentioned, they're pricing 100 basis points of rate cuts by the end of the year, which implies at least one jumbo rate cut. It's not happening. They're barking up the wrong tree. And I think if Powell just acknowledges the idea that they are going to cut rates and says nothing more, that'll be hawkish enough for the markets. And the two-year yield is pushed below 4%. And I think that that's got to go higher from here, because the markets are pricing too many rate cuts that are unsustainable as a deck of cards.
If we do see a hint at a 50, how will markets react? Obviously, treasuries are going to react, front end's going to react. Is that a risk on or a risk off or a risk on event?
Well, it is going to be a risk-off event for treasuries, because, the kind of buying that we have seen in the past 3 months is phenomenal. It's kind of epic, that move. I can't overstate that statement. But if you look at the stock markets, Guy, I think that the markets have run up a whole lot. They're above fair valuation. So I think that the markets are going to see it as a risk-off and actually start selling off, because they're pricing in too much of rate cuts. It's not going to happen. So therefore, it's going to be hawkish.
Cross-asset strategist here at Bloomberg on the MLive team, Ven Ram. Thank you very much indeed. We've got some great coverage coming up. Fed Chair Jay Powell speech at Jackson Hole today. It's about 3 p.m., 10 a.m. New York time. We're going to kick off our coverage, though, at around 2 p.m. We've got some great guests. We've got the Atlanta, Philadelphia, and Chicago Fed presidents. Esther George is going to be joining us as well. You do not want to miss the coverage. It is coming up a little bit later on. We're going to count you down into that. We've got some great coverage coming up. The brief is next. Manus Cranny, over to you.
What legacy I would love to leave
is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of session. No. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Craney. You're welcome to Bloomberg Brief. Let's set your agenda. Ueda remains a careful but clear hawk. A BOJ hike is still on the table. Yen rallies across the board. Laying the groundwork for policy action. Fed Chair Jerome Powell speaks today at Jackson Hole. Bloomberg is live from Wyoming. Vibes heavy, policy light. Vice President Harris formally accepts the nomination as the Democratic presidential candidate. Good morning. It is about the quality of the narrative for the cut that you all so expect. Yes, a lovely phrase from Jonathan Farrow and the team on surveillance. This market is expecting hard landing cuts to satiate a soft landing narrative. Stocks are prevaricating at the moment. The bar is very high for Powell, really to outdove the market. That's BMO's view. Susan Collins sets the table for the language, that sort of progressive, gradual, methodical process that we expect. Goldman's were with me yesterday saying it will be just very, very sort of tepid language. Nvidia's bid this morning up 1.4%. Again, it depends which research you read, whether Nvidia is the more important market event for sentiment than Jerome Powell. Either way, you look at the bond market, we're still above 4% on the very short end of the curve. Curb your enthusiasm. That's basically the message coming from the analyst community and indeed coming from the pre-Powell Fed speak. You took the elevator up, you are on the escalator, very slower to the lower ground. So curb your enthusiasm on 50 basis points in September. Let's see whether Powell reinforces that a little bit later on. And then yen. I thought what was fascinating, Ueda stuck to his hawkish guns as, from where I'm looking and really sort of said, look, we're still there. Policy remains accommodative, even though we hiked rates in July. You've seen a little bit of yen buying, but I love what Pictet say. Nothing too serious. The real moment comes a little bit later on today with Powell. And with that in mind, we are counting down to the Fed Chair Jerome Powell's speech. It is at 10 a.m. Eastern. We'll bring that to you. And it's got the markets. Will they get a clear message? of course, as I say, you have Governor Ueda at the BOJ still saying that a hike is on the table. Let's bring in the team, lay the table for you. Rachel Evans and Ven Ram are with me. Ven, good morning to you. I like what Mizuho had to say, which is the BOJ, Ueda remain cautious. The real scary part is, of course, what happens from Powell. But if I reflect on Ueda, I would say it's a central banker who remains committed to his hawkish position and pretty much true to the sense of, I did the right thing.
Absolutely, Manus. I think you had made it pretty clear that if the economy performs as the BOJ expects it to, the central bank will continue raising rates. But I'm not too sure the markets have got that message. If you look at the yen, it's hardly doing anything on the day. So the markets are
we've just frozen there.
Glossing over the prospect to rattle the markets. The BOJ is not going to rattle the markets. They're not going to raise rates again by the end of the year. I don't think that's a viable proposition. In fact, if you look at the markets, they're not even pricing in a hike by fully pricing in a hike by June next year. I think the markets are completely mispricing the BOJ's intent here. It's useful to keep in mind that the BOJ's mandate is the economy, not what happens to the stock market. They didn't say, but that's clearly the intent. Make no mistake, the BOJ is going to normalize policy and going to raise rates gradually.
Yeah, Van, it's interesting, as you say, the market is mispricing the BOJ, but then the market, one could say, Rachel, good morning to you. The market is so aggressively mispricing the Fed. If you listen to everything that we're being told this week, which is there is this divergence between what the market is expecting, 100 basis points, relative to the Fed speak that we've been given by Collins, by Schmidt, etc. Schmidt wants more evidence. Collins wants a calibration that is certainly not in line with the market. How mispriced is the bond market for Jackson Hole? Good morning.
Good morning. Yeah, no, I think, that's going to be the big question mark for the markets over the next few weeks is really how much of a pullback do we see as we see Powell speak today, then we obviously have the Fed meeting and where we're expecting to see that first cut. But what is the rhetoric that comes out from the Federal Reserve sort of around those cuts? We know that they are heading for easing, but the degree that that is going to be, as you say, steady as she goes, the elevator, not the lift. I think that's going to be sort of very, very interesting to see. And Powell really, in past speeches at Jackson Hole, there hasn't been a huge reaction on the market side. We've typically seen 4 or 5 basis points in either direction, depending on whether it's a hawkish or a dovish message. So we may well be underwhelmed today in terms of the actual direction that we get from Powell for markets. So I think there's going to be a lot more focus as we kind of come out of Jackson Hole. Yes, on his words, on the sort of aggressiveness or lack of aggression that he's showing as it relates to cuts, but also, again, back on that data, because ultimately Powell has been very, very clear that the data is what's going to lead things. And at the moment, there's a lot of that suggests that the economy is not slowing down particularly fast, and things remain relatively robust.
The other narrative that we're hearing, Mohammed Al-Arian was with us yesterday morning, and he said, look, Powell's mission here should be to deliver a clarity around the equilibrium rate and maybe how quickly he wants to get there. Of course, that's going to be data dependent, I know. But how much clarity do you think we will get around the new equilibrium rate?
Yeah, this tends to be a very academic conference. So in terms of what we can kind of draw from these comments and from the papers that are given and the remarks on the sidelines in terms of real-world policy, it varies. The market is estimating that kind of the sort of neutral rate is around 3%, maybe 3.5%. So that would suggest kind of 2 percentage points or so of cuts. That is roughly what is priced between now and July. So at the moment, the market is seeing us getting to that neutral rate very, very fast. And I think it'll be interesting to see, just from Powell, what the indication is about how quickly they think they need to get to neutral. Do they see those signs of a hard landing lurking behind some of the strong data prints that we've actually seen in recent weeks? Or are they thinking, yeah, things are slowing, we are seeing a softening in the economy, we can go relatively slow to reduce rates? I think that's what people are going to be looking for, that nuance.
Okay, Team Bloomberg, thank you very much for being with me this morning. Ven Ram and Rachel Evans on the markets. James Athey is my guest, Marlborough Investment Management, and he writes this as we wait for Powell's remarks. Fed pricing is in the very near term does indeed look somewhat aggressive, given the communication out of the Federal Reserve. Looking further into the future, we would argue that the chances are still high that more rather than fewer cuts will be the outcome. James is with me. He's a global fund manager at Marlborough. Mr. Athey, good morning to you. So you're in there, we're going to have a slightly harder landing camp than most. Contrarian as ever. Good morning.
Morning, Manus. Yeah, not necessarily by design, but it does often seem that way, yeah. The historical record says that soft landings are very unlikely. You know, if you go back and look at Fed transcripts and news reports, there was a lot of talk of soft landings in 2007 as well, and we know how that ended. The two oft-quoted historical analogues for soft landings, which are the early to mid-90s and the 60s, really do not bear a scrutiny when it comes to the comparison from a macro standpoint. The 90s, which is obviously the most recent and possibly the most relevant from a market perspective, unemployment was falling throughout that period from a relatively high level, around 7%. That's obviously a significant economic tailwind, and that makes it a very different scenario from today where unemployment is rising. So the fact of the matter is that the Fed, like all central banks, is looking at data today, which tells it something about what the economy was doing several months ago, and it's trying to make decisions about where the economy will be in 6, 12, or 18 months. And that's obviously very difficult, hence why the soft landings are very rare.
The one thing I love about bond traders and bond brokers is basically just the sheer absolute self-belief. We were so far away from the Fed at the start of the year, and we are still so far away from where the Fed wants us to be. There's a musculature in terms of the positioning in this bond market. I mean, there's real flex in this bond market. They are paying for significant rate cuts for a hard landing, the size of which are for a hard landing, not a soft landing. So with that in mind, do you think the Fed today, Powell, needs to walk us back from that appetite for 50? Is that his mission today, or what is the objective today?
At the risk of being a little disagreeable, Manus, I'm going to say I don't think the market is at all priced for a hard landing. Quite the opposite. I think a couple of 100 basis points. The market's priced for, what, 230 basis points or so in totality. That is taking us roughly back to neutral. As Mohamed El-Arian has pointed out, we don't really know, and the Fed doesn't really know. But roughly, that is where the Fed is telling us at the moment neutral is. So if we see 2 to 250 bips, that would be in keeping with a soft landing in order to ease policy relative, to neutral. In order to support the economy in a recession, the Fed would have to go further than that. So what the market, in my opinion, is doing is looking at the probability distribution. The right tail has been severely clipped and curtailed. The chances of us having a re-acceleration that pushes inflation meaningfully higher in an environment where the labour market, by all metrics, is softening to varying degrees depending on which data you look at, but by all metrics the labour market is softening, and that obviously reduces upward wage pressure, and that reduces the ability to get that self-fulfilling price wage spiral, and obviously that's what the Fed is looking at. The market, however, is therefore saying, well, if the right tail is clipped, there is still some percentage chance, banks have it between 15 and maybe 35% chance of a recession, and in a recession the Fed normally, traditionally, on average cuts around 500 basis points. That distribution of probabilities means that there has to be some downward skew relative to even the Fed's own modal forecast.
Okay, so the right tail has been clipped. Let's get to market action. There's a couple of different things going on here. I want to square away the dollar. You say on these dips that we've had and the dollar's given back pretty much all of this year's gains, you're reloading up on the dollar. Why?
Yeah, the dollar serves two masters, obviously. I like Mr. Jen's dollar smile framework. I think it's simple, but it's very effective and very accurate in describing the dollar's behavior. So we found ourselves in the middle of the dollar smile. The market likes that because it tends to support risk assets, and obviously the market tends to be positioned long in risk assets. From here, there are possibly two outcomes, we would say, in the sort of short to medium term. One is that, as we've already talked about, 33 bips priced for the September meeting looks too much. Potentially 100 bips by year end looks too much, and potentially either the Fed or the data will cause the market to walk that back, and that should support the dollar via higher rate differentials. The other alternative really is that at some stage we do find the data deteriorating more meaningfully, and we do find ourselves in a more aggressive rate cutting environment, but history says that tends to be accompanied with risk off and a flight to safety. So we're in the middle of the smile, but we think the routes to either end of the dollar smile over the short to medium term are actually quite easy to get to.
Can I take the other side of that trade? If you're a buyer of the dollar, are you a seller of the yen? And do you believe, as Ven just said, is that the market, not me, the market has mispriced the proclivity for the Bank of Japan to get through more rate hikes in the autumn, which I gotta say is not what I'm hearing from people on my IB.
No, quite the opposite. We like the yen. We have done for a while, and we've been adding to our long yen position. We're doing that on the crosses rather than versus the dollar. So we've been short sterling yen and we've been selling euro yen recently. Again, it's a fairly straightforward argument, which is that there's obviously quite meaningful policy divergence.
Yeah.
The Bank of Japan is trying to be hawkish. Other central banks are trying to be dovish. But again, underneath the hood, all this talk of carry trades really, I think, has focused on the most short-term investors, those that are most reactive, who have, I'm sure, cleaned up significantly their yen underweights, their carry trades. But the more meaningful position is that sort of implicit carry trade, that implicit yen underweight, which is large institutions globally and large institutions in Japan. And as the hedging cost sort of calculus shifts, as JGB yields rise relative to global yields, investment choices from those big institutional players should shift through time, and that should be supportive for the yen. And if we get a big period of risk off, obviously the yen, being structurally underweight and being a safe flight to quality currency, should rally hard.
Okay, James, thank you very much. Don't be too hard on the fast money.
Thanks,
It paid the bill for many. It paid my bills for many, many years. James Hattie there of Marlborough with his view on the markets. Bloomberg is live at Jackson Hole, gathering throughout the day. We bring you our special coverage of Chair Powell's remarks. Our coverage begins at 9 a.m. New York time with guests including the Atlanta Fed President Raphael Bostic, former Fed President Loretta Mester, and James Bullard, plus the ECB's Mario Centeno. Other stories trending on your Bloomberg terminal this Friday morning. Goldman's deputy head of China unit is said to be leaving for HSBC. This marks the second senior exit from Goldman's China operations this year. HSBC has been bolstering its Asian roots and has made several senior hires in the past year. More bank personnel moves. UBS lost 2 members of its activism defense team to the U.S. rivals. That's according to people with knowledge of the matter. They're going to the M&A teams of Bank of America and Wells Fargo. Skydance is accusing Paramount of breaching the terms of its deal by continuing to engage with another suitor. Skydance says Paramount didn't provide written notice of an extension to the so-called go shop period. It also says the extension isn't valid because Brofman's proposal isn't superior to the Skydance offer. Coming up on the show, Vice President Harris formally accepts the Democratic Party's nomination.
I promise to be a president for all Americans. You can always trust me to put country above party and self.
We'll take a look at the policy impact of the White House race. Ed Mills from Raymond James joins me in just under 30 minutes right here on Bloomberg Brief. Context matters every day on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Or other authorities.
Could face bigger challenges next.
And was going to keep reading
World Cup. This is a 3
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I promise to be a president for all Americans. You can always trust me to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
As Vice President Kamala Harris formally accepting the Democratic Party's nomination for president. Immediately after her speech, her Republican challenger, Donald Trump, dialed into Fox News.
Well, the biggest reaction is, why didn't she do the things that she's complaining about? All of these things that she talked about, we're going to do this, we're going to do that, we're going to do everything, but she didn't do any of it. She could have done it 3.5 years ago. She could do it tonight by leaving the auditorium and going to Washington, D.C.
Joining me now is Vonnie Quinn. She's been in Washington through the week for this DNC conference. Vonnie, good to have you with us, closing off. I mean, beyond proposing herself as the leader for all Americans, if you dissect the messaging from Kamala Harris last night, she really went after certain chunks of policy that are going to be on the stump over the next couple of weeks. Israel, Palestine, at her global leadership, but also she really took the fight to Trump in terms of some of the big issues around tax, didn't she?
She really did, Manus, and it's surprising how large she went on some of those issues, some of the issues that she's perceived to be frail in, such as Gaza, as you said, and also border and immigration. So, yeah, she literally said that in many ways Donald Trump is an unserious man, but the consequences of putting Donald Trump back in the White House are extremely serious. So she continued on with her speech to make more criticism of Donald Trump. And remember, with just 75 days left, that's about twice as long as the amount of time we've had since the assassination attempt. It's not very long at all.
No, it's not. And I mean, just on some of those policy points, it's interesting. You know, she talks about, imagine a Donald Trump with no guardrails. How would he use the immense powers of the presidency of the United States? And just listening to that last piece from Harris, where she talks about, you know, a peaceful transfer of power. We played a little bit of former President Trump's reaction on Fox. He dialed in. The campaign response so far from their side on this speech, how would you describe that overnight?
Well, it was instant, really. I mean, he was on Truth Social through the whole speech, and then immediately after she spoke, he called in. And as you could tell from that excerpt, he was just sort of giving broad complaints about how she's done nothing. She does a lot of talking, but she doesn't do anything. And he listed all the things he was talking about: fracking, crime, housing. He said, I think he was surprised she hadn't talked more about housing. Perhaps he was prepared for that. He actually also said, other than that, it was a nice-looking room. So I think the showman in him had some respect for the DNC's slick operation, because it was, you know, a phenomenal 4 days. And again, you know, it's quite unrealistic how the DNC and the Democrats have managed to hold on to the narrative in the last 5 weeks. It's been 5 weeks since Joe Biden pulled off the ticket. It's quite hard to believe. We will, though, see in the next few days and few weeks the polling bump, should it materialize. It looks like it will. But as Kamala Harris herself said in the after parties, after accepting the nomination, there's work to be done. So celebrate tonight, but from tomorrow, we need to get on the bus and start campaigning.
Yeah, the reality, those polls, that halo effect may indeed dissipate. Vonnie, thank you. Thank you for the coverage through the week. That's Vonnie Quinn in Washington. Coming up, a look at the schedule for the headlines for the rest of the day. The very latest on Canada's dispute with the rail workers. And I'll take you through some of the front pages. Good morning from the Bloomberg Brief team.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Front pages from around the world this Friday morning. This is what's making the headlines. First up, we have the New York Times. The Israeli military issued new evacuation orders in the Gaza Strip, forcing more Palestinians to flee their homes and shelters once again. The U.S. and others tried to salvage faltering talks. Next up, AP freight trains in Canada could be running again within days. The government forced the country's two major railroads into arbitration to resolve their labour dispute. The move is aimed at averting economic crises across Canada and the US. And Washington Post leads with this. The FDA has approved a new coronavirus vaccine, clearing the way for shots manufactured by Pfizer, BioNTech and Moderna to start hitting pharmacy shelves and doctors' offices within a week. Let's give you a quick snapshot. We're beating that drum to Jackson Hole, to Chair Powell's speech. We are going to discuss what that means for markets. Live to Wyoming.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference, actually, in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker, or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. UAIDA remains a careful but clear hawk. The BOJ hike is still on the table. Yen rallies across the board, laying the groundwork for policy action. Fed Chair Powell speaks today at Jackson Hole. Bloomberg is live from Wyoming. And vibes heavy, policy light. Vice President Harris formally accepts her nomination as the Democratic presidential candidate. Good morning to you. Equity markets are bid slightly this morning, up 0.4%. There's a sense of optimism that Jackson Hole will not deflate the narrative of the roadway for rates. Rates on the short end of the curve at 2%. You can pretty much say that we've got a bond market that is quite long. It's very expectant of a benevolent Jay Powell. Well, is it? Well, not if you listen to Collins et al. Yesterday. Gradual, methodical pace. Schmidt wants more evidence. So again, this bond market is slightly unsure what they're going to get from Jay Powell in Wyoming. The bar is now very high for Jay Powell to outdo his dovish expectations that are evident in the market. That's according to BMO. It's going to be slower to lower. That seems to be the catchphrase of the day. Dollar yen, that's dollar down, yen slightly better bid. UAIDA sticks to his guns more or less in front of Parliament, where he says, look, policy, it's still accommodative, even after the July hike. Look, he did nothing to refuel the unwinding of the carry trade in a furious way. Nvidia's up 1.2%, and if you read Wedbush Securities documents, they say that reporting next week is much more important than Jackson Hole. Well, that's just an equity market view. We have 5 hours until we actually hear what the view is from the Fed Chair Jerome Powell at Jackson Hole. Stuart Poole of Bloomberg Economics joins me now. Good morning. A lot of tension, a bond market that is highly expectant, still pricing 100 basis points of cuts. You listen to Mohammed Al-Arian, and really we're just whistling in the wind if we're hoping to get 100 basis points of cuts. What does Powell need to do to not shake the bond market to its core? Because that's the objective, really, isn't it?
That is. I think that the first thing he needs to do is signal that a rate cut is definitely coming in September. He doesn't necessarily need to signal whether it's going to be 25 or 50, but it would be helpful if he laid a little bit of groundwork for markets to expect or to understand what would warrant a 50 basis point cut, a catch-up cut, if you will, given what we saw in the FOMC minutes. I'm not entirely convinced that Fed Chair Powell focuses so heavily on what constitutes R* or the real neutral rate of interest, but I think that he will acknowledge that monetary policy has been restrictive. It has been helpful in bringing inflation back down toward the 2% average inflation target, and in that respect, it is appropriate to gradually cut rates. And as you astutely observed, the key word this week from policymakers has been gradual.
It has, and I think Susan Collins summed it up very well herself, when she talked about gradual, methodical pace, and that lays the framework. Reflect back on Mohammed Al-Arian, who was with us yesterday with Jonathan and the team yesterday, and he talked about the necessity to restore an anchor to policy, because the world every day, the world is priced off 10s, it's priced off 2s, it's priced off software. The whole world, literally, the system is priced off those benchmarks. And the scale of volatility that you've had at the short end of the curve has been violent, to say the least. How does he re-anchor stability?
I think that the first thing that he has to do is indicate that further deterioration in the labor market would warrant cuts, probably at 50 in September. In doing that, you set expectations for the path of monetary policy for the next 3 meetings, because you say, okay, if we have a 4.4% unemployment rate in the August jobs report, we know we're going to get a 50, we'll probably get a string of 25s thereafter. If the Fed Chair Powell were to come out and say that inflation has yet to be fully tamed, I think that you get further sell-off in the front end of the curve, and you get some more of that violence, which would really not help his cause for bringing any sort of stability or bringing any sort of clarity in this messaging.
But when I look at the break-evens and I look at the commodity complex, I don't think, I beg humble forgiveness here, it doesn't look like the break-evens or the commodity complex are implying that right tail risk. I had James Athey with me a little bit earlier, and he made a nice point, which was, you know, the right tail risk of resurgent inflation has been clipped in his view. Would you agree?
I do agree. I mean, looking at break-evens, I think that that's clear. I think that that's what's going. Of course, you can't always infer precisely from break-evens from how folks' spending behavior will evolve and what that'll then mean for inflation down the road. But I do think that that right tail has been mostly clipped. I do think that it is time to start easing monetary policy and start making rates less restrictive. I think Powell, as more of a practitioner than an academic, would agree with that perspective. And I think he is going to signal a cut in September and a string of cuts thereafter.
Okay, let's see how the bond market reacts, or do they get the message that they want. Stuart, thank you very much for getting up early and joining me around the desk here this morning. That's Stuart Paul, Bloomberg Economics, on the look ahead for Jackson Hole. We're live there throughout the day, so we have special coverage, both including Chair Powell's remarks. That coverage begins at 9 a.m. and then we have a roll call of people you do want to listen to. Coming up, Vice President Harris makes her case to the nation.
I promise to be a president for all Americans. You can always trust me to put country above party and self.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
I promise to be a president for all Americans. You can always trust me to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
The Vice President Harris there formally accepting the Democratic Party's nomination for president. Her opponent, Donald Trump, dialed into Fox News shortly after the speech.
Well, the biggest reaction is, why didn't she do the things that she's complaining about? All of these things that she talked about, we're going to do this, we're going to do that, we're going to do everything, but she didn't do any of it. She could have done it 3.5 years ago. She could do it tonight by leaving the auditorium and going to Washington, D.C.
Vonnie Quinn has been burning the late-night oil in Washington through the week. Vonnie, good to have you back with me. I mean, she obviously irked Trump. She called him a non-serious man. She talked about him cozying up to tyrants, irked him to the point that Truth Social lit up, and he called into Fox. So where did she lay into Trump? Was it on the personal side or the policy?
It was interesting. It was in keeping with the theme of the whole DNC. In fact, Manas, she was talking about the protection of democracy, essentially. She said, imagine Donald Trump with no guardrails and how he would use the immense power of the presidency of the United States. This is after she laid out the arguments, as her public prosecutor personality allowed, for why not to elect Donald Trump. She said, consider not only the chaos and calamity of his time in the White House, but also the gravity of what has happened since he lost the last election. She drew a lot of attention to the fact that he has been found guilty by a jury of fraud by everyday Americans, just like you guys, the electorate, and also found liable for committing sexual abuse. So she really did lay into him, and it can't have, you know, been very pleasing to him to hear that, but he continued on with his poking of her, saying that she talks a lot, but that she doesn't actually do anything. Now, this is a complaint that he's been making over and over again. It's to be determined if it's landing. It doesn't seem to be very strong of a complaint. Perhaps stronger are his complaints about the border and how fragile she is on border and immigration issues. She took those on too as well in the speech. She essentially said that she would bring back the bipartisan border bill, and she gave a whole section of her speech to how she would act in the international community, where Donald Trump perhaps would cozy up to autocrats because he wants to be one.
Well, if we go back 7 days ago, we were talking about economic policy from Kamala Harris. We're talking about housing, 3 million homes, $25,000 to first-time buyers, prescription drugs, etc. One could say that there wasn't that much of a lean into economic policy last night relative to, let's say, where we have been. We know Trump has called her a comrade, Kamala, and, you know, various monikers around this interventionist style of economic policy that she's been putting forward. Why do you think they stepped back from that last night? It was, I think we're framing it as being sort of slightly policy light, you know, vibe heavy, policy light. That was quite punchy.
Well, bear in mind that she is introducing herself to a huge swath of the American public that may not have taken all that much notice of the vice president before, right? First time on a stage like this where she can command complete attention. Before she had to be in the shadows a little bit. And also she was trying to appeal to not just Democrats, but perhaps lapsed Democrats, independents, Arab and Muslim voters who hadn't particularly been too pleased with the Biden administration before, and Republicans. A few minutes before she came out, Representative Adam Kinzinger Bloomberg got on stage and basically spoke to conservatives as if they were the entire audience and said, you know, the Republican Party is not conservative anymore and that Democrats are as patriotic as we are. He said we as if everybody was in agreement with him. So she was definitely trying to do a lot of things in just one speech, and she kept it to 40 minutes. It was a prosecutor that really understood her brief.
Indeed, succinct as ever, like yourself. Funny, good to see you. Get some rest. We'll see you in New York next week. That's Funny Quinn, tracking the DNC throughout the week for us here on Bloomberg Brief. For more on the White House race, I'm joined now by Ed Mills, Washington policy analyst over at Raymond James. Ed, good morning to you. You've had a little bit of time to chew on this. Our headline is vibes heavy, policy light. The candidate did a lot to sell hope and joy, but avoided providing policy specifics. But the role last night was really to provide hope, joy, and maybe grab a few swing voters along the way. Was it vibe heavy, policy light for you? Good morning.
Yeah, good morning, Manus. I think that's fair. I do think the speech, to me, was broken into 4 parts. Number one, introducing herself to the American people. We have the saying, you can't introduce yourself for the first time twice, but that's really what she's trying to do here. And what we've seen since she's ascended to the top of the ticket, her favorability ratings have gone up. If you like someone, you're more likely to vote for them. Number two, prosecuting that case against Trump. We'll talk about that a little bit more. Third, outlining a little bit more of her domestic agenda. You highlighted the fact that she did not talk about price gouging, FTC. I think that was some of the most controversial parts of what she outlined, and that's where Republicans have attacked her. So not terribly surprised that she shied away from that a little bit. But was probably the most striking to me was the fourth part, was Kamala Harris as potential commander-in-chief, really outlining her views on international policy and kind of giving a strong and forceful address saying how she would be different from Donald Trump, as well as how she would rule kind of her administration on these kind of really important geopolitical issues, especially a really important portion related to the current war between Israel and Hamas.
Well, let's just unpack some of that. Can we just sort of step back for one moment? At the start of this summer, we were talking about a Republican sweep, Republican Trump trades. It was, I mean, it was pervasive. Now, nobody is really sort of talking about a Democratic sweep. Is that folly? I mean, they're playing themselves as being the underdogs. We are the underdogs, and we've got a lot of work to do. So we've pivoted from red sweep to timeout and let's rethink. How do you see the positioning for the Democrats? She's got velocity and momentum, but can that translate to something more than just the presidency for her?
Man, that's a really important point. At the beginning of the year here at Raymond James, what we told our clients was prepare for a sweep. Not necessarily a Republican versus Democratic sweep, but when you add up the odds, we thought the most likely outcome is a sweep one way or another.
Right.
When everyone was thinking that the most likely outcome was divided government. And the reason for that is that, you know, these elections tend to have a little bit of momentum one way or another. You talked about the Republican sweep, but it is important to talk about the potential Democratic sweep. When you have a sweep, you unlock reconciliation. And reconciliation is one of those things that people's eyes glaze over and say, oh, that's technical. You don't really can do all that much, except for every single major policy change in the last 30 years in our country has almost exclusively been done through reconciliation. And then you look ahead and say, all right, starting January 1st, we restart the debt limit. December 31st, we have the expiration of almost $5 trillion worth of tax cuts. If there were to be a Democratic or Republican sweep, you could have directionally kind of the most kind of wide kind of changes in our government's history. And I think from my perspective, my job as a Washington policy analyst is trying to bookend that risk. And so in divided government, that bookend is close. In a sweep, it's really wide. And that's where I think if it does look like there's going to be a Democratic sweep, that's where you can get some of the volatility coming here, a Republican sweep as well.
That volatility, if I can sort of squash this down, I know time is a brutal way of doing that. It's around inflation. The accusation from Larry Summers, Adam Posen, is that if it is Trump and if it is a Republican, not just president, but sweep, trade, tariffs, tax, immigration. But the other side of this trade is Harris. I mean, the accusation is interventionist policies, but to what extent is she an inflationista?
Yeah, I think that's important. I think it really depends upon Congress. I mean, if there is going to be a sweep, I think you'd have to look at kind of an increase in the corporate tax rate. I think there's very high probability that most, if not all, of those taxes reset. And I think what Democrats would say is that's where taxes go back to where they were under Barack Obama. There'll be concerns because we've seen as much government spending and fiscal stimulus going into the market under the Biden administration. But there's a strange argument to be made that because those taxes reset and Democrats could allow those to go up, that compared to what Trump is calling for with higher tariffs, stricter immigration, higher deficits, are Democrats becoming the party of fiscal responsibility vis-a-vis the policies where we could see a more highly likely second wave of inflation if Trump is elected and he pursues the policies he's saying. It's a lot of flipping of the script in D.C. when we think ahead as to what each party would do after this election.
Look, we're going to get a bunch more polls in 30 seconds. We've got quite a way to run, 70, 80 days until the election. Your base case is not a sweep, but divided government. Can we just square away the probabilities?
Yeah, I think we're in about the most likely scenario still is a Republican sweep, because if Donald Trump wins, I think that he is going to have the House come with him, and it's almost guaranteed for the Senate. And so that's about a 40% probability. And then for a Democratic sweep, it's probably in that 20-25% probability. Divided government is in that remaining 35%. So that's where our base case is sweep either way, and still the highest probability being a Republican sweep, which is counterintuitive when you look at the polls right now.
Ed, thank you very much. That's why we bring you on to get the counterintuitive. Ed Mills of Raymond James, my guest this morning on Politics. Context Matters from beautiful New York.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
look at the day ahead for you. We've got new home sales at 10 a.m. Eastern, and then it is the main event. The Fed Chair Jerome Powell speaks at Jackson Hole, 10 a.m. And don't miss our coverage and interviews throughout the day from the symposium. The Atlanta Fed's Raphael Bostic, former Fed presidents Loretta Mester and James Bullard, plus the ECB's Mario Centeno, join the Bloomberg team on the ground. Mike McKee is there, our chief international economics and policy correspondent, literally waking up in the middle of the night for us. Mike, good to see you today. This is going to be a pretty interesting day in terms of threading the needle on what the market can expect between now and the end of the year. The bar is high for Powell to outdove this market, isn't it?
It is. Jay Powell is expected to dodge as much as possible specifics about what the Fed is going to do. The idea is they're going to move in September, but he doesn't want to put that as a certainty. So he'll talk about we can soon move if the data continue to show us what they've shown us so far. And I think at this point, markets have basically priced that in. If he were to say, we're going to move on September 18th, then you'd get a much bigger reaction in the markets.
Yeah, I was just reading what Paul Donovan wrote at UBS. Now would be a great opportunity to outline the medium-term vision, but track record suggests data dependency and myopia. What has he got to do to sort of lay the groundwork for this cycle? Do you think that we'll get a hint about the ability for the Fed to be nimble? I mean, if you listen to some of the narrative from Collins yesterday, it really was about gradualism, wasn't it? It was about you know, a slow, measured pace of cuts.
Yeah, as I'm talking to Fed officials here, that's basically what they're all saying. If they start the process, they're going to do it slowly to make sure that the economy responds the way they want it to, and the markets respond in a way that doesn't cause further problems. So what a best case scenario might be would be a quarter-point move at every meeting remaining this year. There are 3 meetings. If they were to increase that pace, it would probably because there's some sort of problem in the economy. Maybe we get a really bad jobs report or something like that. But for right now, the idea is slow and steady, and they continue into 2025. The real question over the medium term is how far do they go in cutting? What's going to be the new neutral rate? And their general reaction from everybody I talk to is that they don't know yet. They think that the economy is growing faster, its potential is greater, which would imply a higher rate. They are never going back, if they can help it, to zero. So somewhere in that range is where they end up. And that's what the markets would really like to know, that I don't think they're going to get it today.
No. Well, look, these markets, the equity market and the bond market, they have hitched their wagon to that 100 basis points. And I think anything that sort of knocks it off that pedestal, Mike, could be injurious. We're going for a second week of gains on these equity markets, and bonds are at 4%. Mike, enjoy yourself in Wyoming and Jackson Hole. A snapshot of some of the other stocks just that are going to be on the move today. Keep an eye on these couple of movers. Workday, increasing their profitability over the next 3 years. Cava boosts the annual outlook for comparable sales. They're nicely bid up 9.8%. And Ross Stores, the results beat, boosting the forecast. That's it from Bloomberg Brief. Surveillance is up next. Jonathan is in the seat. He'll take you through the run-up to Jackson Hole. That's everything from Bloomberg Brief. We'll see you on Monday morning. Let's do it all over again. 5 a.m. Eastern from New York every day.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zabe Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
The market is really getting ahead of itself.
There is, I think, some risk in the market just from a valuation standpoint.
There's this contrast between what the bond market thinks and what the equity market thinks.
This market is pricing the Fed to return to a neutral stance for monetary policy.
It's not about whether they go in September anymore. I mean, that debate is over.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, coming off the back of the biggest one-day loss on the S&P 500 in around about 2 weeks. Your scores this morning look like this. Equity futures on the S&P 500 firmer by 0.5%. The Nasdaq 100 doing nicely, up by almost 0.75%. The small caps, the Russell, up by 0.5%. The fate of this market, the price action in the hands of one man, Chairman Powell of the Federal Reserve, out in Jackson Hole, Wyoming. That address begins at 10 a.m. Eastern Time. We've been anticipating this speech all week. And 3 weeks ago, for many, this would have been a very, very different address following that August 2nd payrolls report for the month of July. And people started talking about 50 and maybe even an emergency rate cut. 3 weeks later, I have to say things are a whole lot calmer. We've heard from Fed Presidents Collins, Harker, Schmidt, none of those Fed officials flagging any real urgency. And you can thank the recent economic data. 3 weeks of jobless claims, subdued jobless claims, just maybe calming things down just a little bit and putting some fuel into some high yields over the last 24 hours. So check out the bond market. The 2-year back through 4%. If we can take a look at the 10-year together and the cross-asset board, the 10-year shaping up as follows. Yields just about unchanged at 385.39. A big focus on foreign exchange over the last month or so. Dollar weakness absolutely dominating things. 5 weeks of dollar weakness on the cards here. The longest weekly losing streak for the greenback for the year so far. Euro dollar 111.16. Big morning ahead then, big hour ahead. We'll catch up with Stuart Kaiser of Citi ahead of Chair Powell's remarks in Jackson Hole, Isaac Boltanski of BTIG as Harris accepts the Democratic nomination, and Ian Shepherdson of Pantheon saying the Fed should have eased back in March. We begin with our top story. Stocks moving higher ahead of Fed Chair Jay Powell's remarks at 10 a.m. Eastern Time. Stuart Kaiser of Citi expecting Powell to cement a 25 basis point cut in September and writing the following. There is a low probability the chair would pre-commit to larger cuts ahead of August payrolls and another CPI print. Stocks might initially respond positively to that dovish shift, but it would also raise questions about how worried the Fed is about growth. Stuart's with us for the next couple of hours. Stuart, good morning to you.
Good morning. How are you?
Let's get to that speech. What are you looking for from Chairman Powell in Jackson Hole this morning?
I think the question is he going to sound more like the Fed minutes, or is he going to sound a little bit more like the Fed officials that have spoken since then, right? So the Fed minutes, a vast majority of participants think a cut's appropriate. That's going to sound a little more dovish. It did seem like Fed officials the last couple of days tried to kind of walk that back, half a step or so. So I think it'll just be the question of where does Powell kind of fall on that spectrum? Does he sound more dovish, or is he a little bit more conservative based on the data you mentioned?
Do you think unanimity is important to the Federal Reserve Chair? Because when I listen to the likes of Boston Fed President Collins has come out in the last 24 hours and said no real need for urgency here. If she's saying no real need for urgency, could we expect to hear any real need for urgency in that address later on this morning?
I mean, I don't think I think the Fed, the last couple meetings, frankly, has really tried to guide the market back to center lane. So that's where I think he'd want to get. I don't think he wants to suggest the Fed is super urgent in either direction, especially right now, because there's only one direction they're going to go, right, which is to cut rates. So if there's a lot of urgency in that direction, I think what he's telling you is he's legitimately worried about the growth outlook. And I don't really think that's a message he necessarily wants to send to the market.
This market right now doesn't seem legitimately worried about the growth outlook if you're looking at the performance of equities. We've had a series of all-time highs on the equal weight on the S&P 500 this week. We've had certain days where small caps have started to re-establish leadership as well. Based on that, it feels like this market is priced for a soft landing, and at the same time it wants the rate cuts typically associated with a hard one. Is that a disconnect that you think needs to be resolved?
It is a little bit of a disconnect. I would agree. Look, I think 50 basis points in September is actually bad for equities, in my view, because I think if it's, let's say it's 25 basis points and the next 25 is data dependent, so to speak, the data dependency is on the payrolls report on September 6th. So to get 50, you'd kind of need a weak payrolls report. And as you know, we've been very much own equities until payrolls weaken. So, my view would be if you get 50, it's probably not necessarily a good thing for equity markets. The markets do want to have their cake and eat it too, without a doubt. And that's why small cap has been so popular, right? It's if you get 150 to 200K jobs, let's say, as a number at the beginning of September, and then they cut 25. Well, now you're in a situation where you're soft landing with insurance cuts. And our view has long been that is kind of the uber bull case for markets. So yeah, the market would love it. I don't think the market's going to get strong labor markets and 50 basis points. So they're going to have to give up one of those things. And if I'm an equity investor, I'm willing to give up 25 basis points of cuts to keep that labor market working.
Things have changed a lot in the last 3 weeks. I started the program by going back to August 2nd. Do you think about where we were August 2nd? Even you were considering pulling back on risk because this might be the beginning of weak labor market data. 3 weeks later, a string of decent jobless claims. It feels like we're back to where we were. Do you think we have actually introduced some two-way risk back into this market, or are we exactly where we were 3 weeks ago, just before we got that payrolls report?
I think there's more two-way risk, and I think the risk reward's a lot worse now than it was a couple months ago, just because when you get down to near that 100K payrolls number, you're right on the borderline of where the market's going to really start to worry about things. So I do think the risk reward is worse. That said, to your point, the data we've gotten since then kind of makes that payrolls print look like the outlier rather than the trend. So if the data keeps in that direction, then equity markets are going to respond well to it. But the risk reward, I mean, how we phrased it is you spend 6 to 12 months in a higher for longer environment. That was how you traded the market. Strong growth, pushing out rate cuts, equities work. I think the market's kind of transitioned now to we're in a slowing growth environment. So now we have to trade slowing growth and decide whether it hard lands or soft lands. And we don't like the risk reward of that phase and nearly as much as we like the previous one.
There's a few risk events on the calendar. We've been through at least one. Chairman Powell, a little bit later this morning, we've touched on the other. The payrolls print of September 6th. The read on what happened in the month of August. Do you think we're underpricing that as a risk event at the moment based on what this market's been doing?
Yeah, 100%. To me, that's the single most important data point you'll get in the next 4 to 6 weeks, and potentially it sort of determines the FOMC outcome as well. So, yeah, I think there needs to be more risk priced into that. I think part of that is that this is August, and the second part of that is you have a holiday weekend in between, which kind of can play with vol pricing. But yeah, to me, that is the number one day you need to make sure you're in the office. So I think it should be priced a little more aggressive.
What do you think a bad data point would actually be? And then we can get to how you'd advocate positioning around it. 114 was the last print. Last time I looked at the median estimate of our survey for payrolls for the month of August. We were looking at about 155. That's based on 4 estimates. We'll get a whole lot more between now and then. What is bad for you? Is it sub 150, sub 100? What would bad news actually be?
Yeah, I think sub 150 is going to get people's attention. I think, like, let's say sub 125K, I would put in kind of the bad category. I think if you're in the double digits, markets are selling off, fairly aggressively on that. So we've sort of said 150 is the Mason-Dixon line. Whether it's actually 125, we could debate that. But I think sub 150 is definitely going to get people's attention because July is typically kind of a weaker month historically. So that number, I think, some folks are blaming that a little bit on seasonality. You don't have that same challenge in August. So if you get a weak print, and you're stacking them up back to back. So yeah, 150 or 125, anywhere below there, you need to worry about.
You mentioned that August 2nd is starting to sound more and more like an outlier. How does the data stack up between the data and what we've heard from corporations at the moment? Because the guidance we get from the consumer-facing companies, I have to say, it's highly contradictory at the moment. You've got a series of companies, Williams and Sonoma yesterday, doing poorly. Then you hear from places like Ross Stores doing okay. Likewise on Walmart and Target, Home Depot suffering, Lowe's suffering. The list is like this long for companies struggling and this long for companies who don't see any weakness at all. What explains all that?
It's a good question. It seems like you're getting some trade down. So like a Walmart or Target that normally wouldn't have been the higher end consumer. It seems like the higher end consumer is finding their way into those stores a little bit. But to your point, this hasn't just been claims data. I mean, last week our view was that the Thursday data, which was Walmart claims and retail sales, was actually the more important group of data than CPI was. And you back up Walmart with Target, I think you're getting at least some message that the lower end consumer isn't under intense pressure. I'll agree it's a mixed story, but mixed story is better than what people were worried about after the August payrolls print, right?
Yeah, I said at 8:31 Eastern Time, August 2nd, ladies and gentlemen, welcome to a growth scare. Yep. In that moment, that's exactly what it was, and that growth scare has faded over the last 3 weeks. With everything we've talked about in the last 8 minutes in mind, what are you advocating for? I know you get super tactical. What are you suggesting people do between now and, say, September 6th, the next 2 weeks?
Yeah, I think you kind of want to run long risk between now and September 6th. I know it's a very tight window, but you're kind of in low volume markets. I think the trend has been set, which is sort of an upward trend in that period, and I think we will perform pretty well in there. I think you'll probably get a pretty friendly message from Chair Powell today as well. So I think you're a little bit bullish into that, but I think the main takeaway that we're hearing from institutional investors is even if I wanted to add risk, I'm in a low volume part of the year. September seasonals are horrible. And then I've also got this massive risk event the first week when I come back from vacation. So it's a little hard to just add a lot of core risk. The one benefit will be your kind of vol targety systematic funds are going to be under the surface probably buying stocks for the next week or two. In a low volume environment, that kind of probably lifts you as well.
Is the trend for leadership set as well?
It's a good question. I don't think so. I think the leadership is still a little bit flux because that payrolls print is going to it's going to at least set the tone, hard landing versus soft landing, let's say for the month of September. Those two trades are just like diametrically opposed to one another. So I think it is a little bit hard to know what to own. To your point, small cap has caught a bid, equal weight has caught a bid. That's earnings related. That the S&P 493 or whatever you want to call it actually produced year-on-year EPS growth this quarter. So there is a fundamental kind of underpinning to that trend. It's just hard for me to get fully behind a small cap trade if just given the risk reward around hard landing.
The S&P 1 reports next week. We'll spend some time on video a little bit later this morning. Stu's going to stick with us. If you're just joining us, welcome to the program. Equity futures on the S&P 500 firmer here by 0.5%. Absolutely stacked morning for you over in Jackson Hole. Bramo's there. We're going to catch up with her a little bit later ahead of that speech from Fed Chair Jay Powell. Anne-Marie over at the DNC in Chicago. We'll speak to her in about 5 minutes, so look out for that conversation in just a moment. Let's take an opportunity to get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahira Hackers. Hey, Yahira.
Hi, John. British tech entrepreneur Mike Lynch and Morgan Stanley International Chair Jonathan Bloomer were among the victims found dead on a luxury yacht that sank near Sicily on Monday. Sources who asked not to be identified confirmed Lynch's death, while Bloomer's children said in a statement he and his wife were among those recovered. Lynch was 59. He was attempting to restore his reputation over the ill-fated 2011 sale of his software company, Autonomy, to Hewlett-Packard. Bloomer was 70. He and his wife were guests on the yacht trip celebrating Lynch's acquittal on charges related to Autonomy's sale. Meanwhile, the BOJ is sticking with its hawkish stance as it unwinds years of ultra-easy policy. Speaking earlier today, Bank of Japan Governor Kazuo Ueda said policymakers can add to hikes they made in March and July if the economy and prices are in line with their expectations. As a result, the yen is strengthening against the dollar. And shares of Ross stores are rising in the pre-market, the discount chain beating Wall Street expectations and raising its 2024 profit outlook as it saw more demand for its discounted apparel, while freight costs also eased. The company's results aligning with other retailers like Walmart and Target, which have shown consumers across the board are searching for bargains. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on this program, heavy on vibes, light on policy.
We will create what I call an opportunity economy where everyone has the chance to compete and a chance to succeed.
We're going to do this, we're going to do that, we're going to do everything, but she didn't do any of it.
We'll talk about why she didn't do any of it up next on the program. That's next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The whole program this morning essentially anticipating the words of one man, Chairman Powell, a little bit later this morning at 10 a.m. Eastern Time. Equity futures on the S&P going into it look a little something like this. We're firmer by 0.5%. It yields just about unchanged on a 10-year, 3.8539. The words of Mohammed Al-Erin on this program yesterday, it is problematic in my mind that the market is pricing in so many rate cuts right now. The market is overdoing it. We'll get a range of views on that point throughout this morning. Under surveillance this morning, heavy on vibes, light on policy.
As president, I will bring together labor and workers and small business owners. We will create what I call an opportunity economy where everyone has the chance to compete and a chance to succeed.
The biggest reaction is, why didn't she do the things that she's complaining about? All of these things that she talked about, we're going to do this, we're going to do that, we're going to do everything, but she didn't do any of it.
So here's the latest this morning. Kamala Harris formally accepting the Democratic nomination, prioritizing a fight for America's middle class. Donald Trump zeroing in on immigration as his counter-programming campaign made a stop at the U.S.-Mexico border, threatening large tariffs on countries that don't accept deported migrants. Joining us from the DNC is Chicago. It's Bloomberg's Anne-Marie. AMH, let's get straight to it. The question that came from the former president, why didn't she do these things that she's complaining about? What's the response from the Democratic Party to that?
Well, Jonathan, she gave this speech last night, which I think
you nailed it. It was heavy on vibes and rhetoric and short on policy. That is normal for acceptance speeches. What Donald Trump is going to do now, and when we're on a race 74 days to this election, he is going to want to define her and tether her to Biden. Biden obviously was not polling well, not only because of things like inflation and his age, but also just, other things not happening under the surface, broader in the economy as well as immigration. So Donald Trump and his campaign has been trying to nail Kamala Harris on those specific policies. Yesterday was really her introducing herself to the American people at the top of the ticket, not just as the VP slot. And when you look at some of the broad parts of policy, whether it's the economy, foreign policy, immigration, and reproductive rights, it really felt like a continuation, or at least she was cherry-picking parts of the Biden menu that she would carry through to her administration. Not a lot of details, but broadly in line with what we've been seeing from President Joe Biden. Maybe she spent a little bit more time on reproductive rights, something that she really talked about when she was vice president already and Joe Biden stayed away from. But most of this felt like a continuation. And Donald Trump is going to try to really tether her to Joe Biden because he polls well when it comes to things like the economy and immigration, and Joe Biden and Kamala Harris did not.
When it comes to Donald Trump, can we talk about one specific policy that's been mentioned in the last 24 hours, threatening large tariffs on countries that don't accept deported migrants? What's been the reaction to that?
Well, Jonathan, when it comes to the Democratic reaction to migration, immigration, Kamala Harris said yesterday this would be her policy position, which is to bring back the bipartisan immigration agreement that was struck between a number of senators, most notably Senator James Lankford of Oklahoma and Connecticut Senator Chris Murphy, and that Democrats have been hammering that the reason why that deal did not go through because President said, I want that deal killed because I want the issue. So that is their current plan, which is more support for border security, the ability for the president to have his executive power to shut it down. When it comes to tariffs broadly, at the entire DNC, they have been talking about the fact that this is a sales tax. They don't want to say the word tariffs because remember, Jonathan, this administration also kept tariffs from the Trump era under Joe Biden's watch, some of those Chinese tariffs, but they are calling it a sales tax.
MH, appreciate the input. We'll catch up with you in about an hour's time from the DNC in Chicago. Speaking of the menu, BTIG's Isaac Boltanski with this to say. The Harris campaign has treated Bidenomics like a buffet, whereby they can embrace the issues that play well at the kitchen table while hopefully leaving the less politically palatable provisions behind. Isaac joins us now for more. So Isaac, let's build on that. What's on the menu?
Well, sure. Thus far, it's whatever plays well with the vibes, as you said, right? Like all that we've learned over the past few days is that they have a triangulation play called here to do their best to A, blunt the attacks that Vice President Harris is too liberal, and B, to meaningfully separate Vice President Harris from some of the more contentious Biden issues and to portray her as a change agent. And that's why you saw President Trump just last night trying to tag her as the incumbent. And that's what the next 74 days is going to be about. Is Vice President Harris seen as a representation of the current administration and the incumbency, or is she seen as an agent of change?
Isaac, when you sit down with clients, when you catch up with them in person and over the phone, and they ask you, Isaac, which candidate is the pro-market candidate? Have you formed strong ideas about that yet?
You know, look, I think what we tried to focus on is acute market themes, right? Like we feel pretty strongly that Trump is good for M&A because he's going to change leadership at the FTC, right? That's something that we can really sink our teeth into. When clients ask who's good for the market broadly, I think that one's a lot tougher because when you look at Trump's policies, we're talking about tariffs, right? We're talking about uncertainty in the global economic regime that I don't think folks are really getting their arms around, especially since we're not going to have the sugar high of tax cuts that come along with that. And so I think that that's really the distinction that we've made. And the point I've tried to make to clients, and the one that I think we really need to start understanding and sinking our teeth into, is no matter who is in the White House, we're going to have buckets and buckets of deficit spending coming through the tax reform effort that comes next year.
I think in terms of more detail on Harris's policies, do you think that's a when or an if? Do you think she's going to try to go as long as possible without providing detail on that, or is she being sort of strategic about it?
I've been surprised at how open Democrats at the convention have been in their belief and their hope that she will not offer much policy detail. I found it interesting that a number of top Democrats have said, do you remember that Elizabeth Warren, when she ran in 2020, had a white paper for every policy? There were 20 pages, well vetted by academics and market experts but for each policy, and she sure as heck didn't win, so why would Harris? And so, look, I think that this is, again, going to be something that they ride the vibes, which John has outlined, for as long as they possibly can. The date that I have circled on my calendar is September 10th. That's the first and only debate between these two. And to me, that's the moment where perhaps the rubber can meet the road in terms of some of these policy specifics that I think we're all yearning for.
Isaac, we couldn't agree more. What is particularly striking to me as well is how much room, how much space progressive like Warren, Alexandria Ocasio-Cortez have given the Vice President, Kamala Harris. They're not tying her to unpopular themes. If you think about where Harris was back in 2019, going into 2020, if you were running in that primary, you had to make commitments to things that weren't going to be popular with the rest of the country. Do they continue to give her that kind of space, Isaac?
I think they do until Election Day. And so there are 2 points to make here. Number one is the one unifying issue for Democrats is that they are against Trump. So as long as they can keep this race about Trump, they will remain together. But the second point, and the one that I think that we should examine over time, is I truly think that if Democrats are in power, you're going to start to see those fissures reemerge. And AMH mentioned the immigration bill that failed. That immigration bill had a chance to become law this year, in large part because of the election. Now, if Democrats win the White House and they're in power in Congress in some way, shape, or form, I'm not sure that same immigration bill passes, because at that point, you see the progressive voices rise and become even louder. And so that's something when we think about that chasm between rhetoric and reality that warrants consideration.
Isaac, when it comes to blue sweep, red sweep, formed any firm ideas on that one also? What's your base case now?
Look, at the moment, I think that we're going through the presidential election. They're the seven on the presidential side. They're the 7 states that matter. I still think that you have to look at the issues that animate those voters. The top ones are the economy and immigration. Trump does better on average by 8 and 15 points in the swing states. As long as that maintains, I view Trump as a slight favorite. On the Senate side, I remain committed to our view, 80+% likelihood that the Senate is going to flip to Republican control. And I think that's something that investors and markets should really moor themselves to, is that we will have a small Republican margin in the Senate that can then give us some sort of framework for thinking about what next year will look like.
Interesting. Isaac, thank you, sir. Appreciate the update. Isaac Bortansky there of BTIG. We caught up with UBS yesterday. I've got the notes in front of me from that conversation. Most of the market negative things that Harris wants, she needs Congress to do. Most of the market negative things that Trump wants, he can do himself. They're my notes, my takeaway from that conversation. That's what it feels like in markets at the moment.
Yeah, I mean, it feels like almost a debate right now of, do you want high taxes or do you want tariffs? And, from an economic perspective, that's the debate. The only caution I would say is, a lot of people are talking about red sweep, blue sweep, but there was a period in Trump's presidency when they controlled both houses of Congress. There was a period in Biden's presidency when he controlled both houses of Congress. In neither case were they able to get the more aggressive things done because the margins were so narrow. So I know the sweep matters, for a lot of political reasons, but policy-wise, they actually weren't able to follow through as much as you might have expected.
And we're expecting some super small margins either way. Stuart's going to stick with us. Coming up on this programme, the latest on the labour dispute at Canada's 2 largest railways with Bloomberg's Brooks Sutherland. That conversation just around the corner. If you're just joining us, welcome to the programme. Here are your scores. Futures doing okay, up 0.4% on the S&P 500. The bond market pretty stable. The 2-year at about 4%. The 10-year around 3.85.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The S&P 500 looking to close out the week just about for a second week of gains on the S&P 500. Yesterday's move, the biggest one-day loss in around about 2 weeks, trimming some of that gain down to about 1/3 on the S&P through the close on Thursday. This Friday morning, we are positive by 0.4% on the S&P 500. On the Nasdaq, up by 0.7. On the Russell, up by 0.4. We've talked a lot about September 6th. Payrolls report just around the corner. Need to talk about NVIDIA as well, and we'll do that later. We'll catch up with Mandeep Singh of Bloomberg Intelligence. NVIDIA earnings come next week. That's the main event for that NASDAQ 100. Switch up the board and let's turn to the bond market. Yields yesterday, much higher, back through 4% off the back of a decent jobless claims number again. We've had back-to-back reads on jobless claims that just contain some of that fear about some kind of imminent breakdown in the US labor market. The 10-year set up at about 385, 30s at 412.30, going into Chairman Powell about 3 hours and 30 minutes away. Let's finish on foreign exchange. 5 weeks of dollar weakness, the longest weekly losing streak for the DXY so far this year. Dollar yen at the moment about 146.11. Dollar yen in focus because of the BOJ and Governor Ueda. I'll get to his comments in just a moment, but essentially the door's still wide open to hike interest rates again at the Bank of Japan. Is that going to happen? How dependent on that is the price action? But we'll get Stuart Kaiser's thoughts in just a moment. Under surveillance this morning, counting down to 10 a.m. Eastern Time, and Fed Chair Jay Powell's remarks at Jackson Hole, Wyoming. Investors looking for clues on the timing, the size, and the pace of possible rate cuts. We've already heard from 3 Fed officials in the last 24 hours or so. This came from Boston Fed President Susan Collins. Preserving that healthy labor market while we continue to bring inflation down is what's most important. Stu, we're going to spend some time on this throughout this morning, but I want to go back to August 2022. The speech we had from the chairman, full of pain, a single issue, Federal Reserve. It was about one side of the mandate. It was about inflation. And you just get the sense, the takeaway for me, the obvious takeaway, 2 years later, the balance has shifted to both sides of that mandate.
I think that's 100% right, and I think that started in December. You know, in December, core CPI got down to a level where the Fed didn't want to create an unnecessary recession if they could avoid it, and I think really since December, over the last 6 to 8 months, the Fed has been gradually moving in that direction. We got that one inflation scare around March, and that sort of forced them to be a little more cautious about it. But otherwise, yeah, I think they're of the view right now, I think, that inflation's at a level at which they can kind of risk manage both sides of the dual mandate.
If they were to take stock of things over the last 2 years, I think they'd be pretty pleased. If you think about where we've been, that pain speech, unemployment's around 3.8%, inflation's up there around 8%. They thought to get from 8 down towards 2, you'd have to see that unemployment rate to be a whole lot higher. Unemployment's inched up to about 4.3. CPI's come down from 8 to around 3. That move from 3.8 to 4.3, that move in unemployment, how spooked do you think they will be by that? They sound very calm, but how spooked do you think they'll be by it?
I mean, I think they're concerned by it. You know, they know what the SOM rule is, for instance, and they're gonna be aware of that. I think it's not necessarily the 50 basis points move. I think it's the speed with which it's happened, and I think they're a little bit worried that this is kind of accelerating, not away from them, but accelerating in a way that this suggests a sharper slowdown rather than kind of the gradual loosening that they're trying to accomplish. So they're definitely focused on it, but I think it's the rate of change in that rather than the actual change that's occurred that's probably got their attention the most.
We'll see if we get a repeat in early September for the month of August. Your 2-year at the moment, just around 4%, the 10-year at about 3.85. I want to turn to this story, the latest on the politics. Kamala Harris formally accepting the Democratic nomination for president. Harris capping the DNC by prioritizing a fight for the middle class and arguing she's best positioned to tackle the U.S. economy. Both Harris and Donald Trump will hit the campaign trail for the next 2 weeks out of the first debate on September 10th. We caught up with Isaac Boltansky at BTIG just a moment ago on the politics of all of this. Stu, your conversation with clients, are they there yet? Are they focused on this in a big way yet?
On the election outcomes? Yeah, I think they are. I think in late July, we saw a little bit of election trade kind of, happening. What's been most interesting to me is I was surprised how convinced people got in early July that, that this was going to be a GOP win. And our view is this is going to be a 50-50 shot, kind of right up to Election Day. And if it's a 50-50 shot, it's very hard to put on high conviction trades this far ahead of time, especially when you have to trade the kind of macro data in the interim, and then you've got this debate in September as well. So, there's a lot of angst about it. I don't know that there's a lot of quote-unquote election trades that have been put on, directly. I mean, we're just lucky that we get 2 weeks of campaigning here, to wrap up.
Is that because they don't know? I don't know how lucky we are, but is that because they don't know what those trades should be? If you go back 8 years, I think a lot of people, and I remember being here in New York, a lot of people had formed pretty strong ideas about who was the pro-risk candidate and who wasn't. And they decided that Donald Trump was not the pro-risk candidate at all. They changed their mind at 4:30 Eastern time on Election Day morning. Do we have a decent idea this time around?
Scott Cronin on our equity strategy team has said both platforms are bad for equities. I'm maybe not as skeptical about it, but look, I think the Trump platform, at least the deregulatory aspect of it and the lower tax part of it, I think the investment community wants to embrace that combination because it did work the last time around. The tariffs obviously, spooks people a little bit, but there's probably some, risk adjustment going around whether he'll do that and to what degree. On the Harris side, we just really don't have enough data. We're approaching the Harris campaign at this point, basically using the playbook you had for the Biden campaign and sort of transposing that forward, unless and until she kind of gives us a little more data. So, if you had to pick one, I think right now the market is probably, viewing Trump as a little bit more, equity positive. But again, to your point, there's a lot of guesswork going on.
Next debate, September 10th, look out for that. I think that's the next big stop for this conversation in many ways. I want to turn to the latest from the BOJ. Mentioned it briefly with the movement in dollar-yen. Governor Ueda keeping rate hikes from the Bank of Japan firmly in play this year, saying the central bank will raise rates again if the economy stays in line as expected. Ueda also playing down the contribution of the BOJ's July hike to this month's global market rout, citing concerns over the state of the U.S. economy as the key catalyst. I'd love your thoughts on this, Stu. The contribution of the movements in dollar-yen to the shakeout we saw at the start of August. Do you think it was overstated?
I do think it was probably a little overstated, but I might also not be smart enough to understand exactly what was happening. But look, if you look at some of those price charts, whether it's yen, whether it's peso, whether it's Aussie, you did have a lot of really large moves in a lot of sort of higher yielding currencies. And was that directly impactful on equity markets? I'm a little bit circumspect about that. Was there spillover from kind of a volatility shock into equities, and also that it came over the weekend in a low kind of volume market? The VIX got to 60, but that was pre-open, and it was not necessarily very tradable. So look, I think there was some indirect or residual impact on equities from a flows perspective, and then I think you also had just a broader base value risk shock that caught people.
We saw how quickly the shorts in the Japanese yen unwound that morning. I think we're all looking at the charts and sort of our jaws were dropping to the floor about how quickly some of this was moving. Do you think we've reset that? Have we just put those trades back on? Where are we now compared to where we were going into that morning?
It's a good question. I mean, I saw a lot of headlines about the yen trade has unwound itself, and I'm not really
not convinced
in that camp. No, because this is a trade that I think was accumulated up over multiple years. And to your point, the stuff moved fast, but were you able to kind of unwind 2 to 5 years of positioning in a week? That seems sort of less likely to me. We've had the same conversation on U.S. tech when semis were down 18 to 20%. People said, "Oh, we're back to neutral in tech." No, we're not. I mean, this thing built up over 2 years. You didn't fix it in 2 or 3 days. So I do think that positioning risk is still out there. And the same for the VIX. If you look at the VVIX, which is volatility of the VIX, that is still well above 100, and it's another just sort of hint that this positioning story has not totally resolved itself.
You know what stood out for me that morning and the days after that? We heard a lot of economists freaking out. Some economists saying we need maybe an emergency rate cut, 50 like right now. I didn't get that sense from market participants. I didn't sense any real fear at all. What would your takeaway be from that?
The idea of emergency cuts just didn't make any sense to me. I think you would have actually put more risk into the system rather than less by doing an emergency cut, because you would have either A, said, we know something about the data you don't, or B, we think this is a financial system functioning issue that you're not aware of, and we need to cut into that. You know, my view on the economic side of it is, if the market wanted to go down 5% on payrolls, it could have done that Friday. Like, the market was open. Yeah. You had a whole trading day for that to happen. It didn't happen. So clearly something else happened over the weekend, and I think that was much more positioning driven than it was necessarily the market all of a sudden on a Sunday evening trading a hard landing.
Dollar yen right now, 146, just about unchanged. That currency pair is negative by 0.1%. Let's turn to this story. Canada's two largest railways preparing to restart after a labour dispute halted work across the country. The Canadian government intervening in an attempt to end the labour dispute. Economists warning the stoppage could cause billions of dollars of losses every single day. Bloomberg's Brooke Sutherland joins us now on this story for more. Brooke, talk to us about what happened and the state of play currently this morning. Where are we?
I think we're a little bit in limbo here. To your point, the Canadian government did step in and is trying to force these railroads and their workers to get back to work. Now, there's a bit of a process here, and we're kind of in limbo until that process resolves itself. But I think the reason why you saw them acting with such urgency is, to your point, to shut down both railroads in Canada at the same time would have massive ripple effects, not just for the Canadian economy, but also for the U.S. It is not all that rare, actually, that the Canadian railroads would have work stoppages for labor disputes, but it is extremely unusual to see both of them shut down at the same time. So historically, shippers have been able to sort of play one off of the other, and now you really do not have that option. And I do have to think that maybe there was some inspiration from what happened with the UAW targeting all of the big three Detroit automakers at the same time to be able to really force their hand to get the benefits and the wage increases that they were looking for.
Brooke, I'm pleased you brought up UAW. On this side of the border, there's a feeling, I think, that maybe we're leaving behind some of these issues as the labour market starts to soften up and weaken just a touch. How did we get here, and can we anticipate more of this kind of labour market action in months and years to come?
I think it would be a mistake to think that we're moving beyond from the power that labor has shown it's willing to use. To your point, we have seen some uptick in unemployment, a little bit of an easing in the labor shortage that the manufacturing industry in particular was complaining about. But I mean, I think when you look at just the impact that shutting down Canada's two biggest railroads would have, that just shows you that the employees that man the supply chain have a lot of power, and they are very willing to use it. You just had the UAW president, Shawn Fain, speaking at the Democratic National Convention, using that opportunity to pressure Stellantis over commitments to a plant that they had committed to keep open as part of those union negotiations. Boeing, meanwhile, is also facing the prospect of a strike, and its workers there had sort of taken the procedural step to move forward with the strike if they can't reach a deal with Boeing before the end of September. And so I think these pressures are still very much alive and well.
But Brooke, for the undereducated, how far apart are the two sides here? I mean, how far are we from getting to something that might be a resolution or even like a temporary, kind of restart?
Sure. So I think the sticking point is actually over quality of life concerns, that the rail workers want to make sure that their needs are met as far as scheduling and rest requirements. And there's a little bit of a balancing act there, because the railroads are also concerned about maintaining safety, ensuring that they make sure they have sort of a smooth flowing run of goods. And so that's really where the tension is at this point. And, I do think if the railroads have said that if they're, into forced arbitration, they're ordered to go back to work by the Canada Labor Relations Board, that they will do so. And so it does look like, we're talking about, maybe at most days rather than weeks. And, what economists would say is that the longer this goes on, the more painful it is. And so you're really looking at sort of like a week or 2 weeks to see those catastrophic economic effects that we're talking about.
Brooke, we appreciate the update. Thank you. Brooke Sutherland there of Bloomberg on the latest out of Canada. Let's take the opportunity to get you an update on stories elsewhere with your Bloomberg brief. Here's Yohara Hakez.
Hi, John. Shares of Workday are rising in the pre-market, up more than 12%, as the company signals a new focus on boosting profits. It expects it will reach an adjusted operating margin of 30% in the next 3 years. The company, which provides software around HR and other business operations, also announcing a $1 billion share buyback program. Meanwhile, Wall Street is still fuming after the Bureau of Labor Statistics botched its Wednesday release of critical jobs data. Annual jobs revisions were expected at 10 a.m. Eastern, but the data wasn't publicly released on time, causing chaos and confusion across markets. The numbers were finally released around 10:30, but employees at firms like Mizuho and BNP Paribas got a hold of the data earlier by picking up the phone and calling the agency. A BLS spokesperson telling Bloomberg its inspector general will investigate. Wednesday's incident is just the latest BLS mishap. In May, CPI data was mistakenly published 30 minutes early. And Southwest Airlines is looking for customer feedback on potential changes to its free checked bag policy. The company is surveying passengers about hypothetical scenarios involving bag fees for lower cost fares. Bloomberg obtained a copy of the questionnaire, where customers are also asked about their booking preferences and travel habits. Southwest telling Bloomberg the survey doesn't signal an imminent shift, but it does come as the airline is changing its free-for-all seating policy as a result of pressure from activist investor Elliott Management. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you very much. In my experience, and I'm sure in yours as well, when you go to get on a plane these days, they can't get people to check the luggage. It's always the same problem. Isn't that your experience too?
Yeah, 100%.
Shouldn't they start paying us to check the luggage? Never mind giving us for free.
Paying you to check the luggage?
Right?
That's a...
Give you a cheaper
I like your
fare.
idea.
Give you a cheaper fare to actually get the luggage on the thing. You see it all the time. All the time. Up next on the program, showing up late to the game.
I don't think that this committee wants to admit in a way that they were late to the game again. I don't think this is really what they're interested in communicating. They also don't want us talking about a recession.
That conversation up next, live from New York City this morning. Good morning. You're watching Bloomberg TV.
About artificial intelligence. Is artificial intelligence going to enable you and others to say we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Stocks on the S&P 500 just about firmer. We're up by 0.6% on the S&P 500. In the bond market, unchanged on a 10-year, 384.44. Things look calm now. They might not be very calm later. 10 a.m. Eastern Time, Chairman Powell addressing Jackson Hole, addressing the Federal Reserve Symposium, and in many ways addressing global markets. Under surveillance this morning, showing up late to the game.
I don't think that this committee wants to admit in a way that they were late to the game again. I don't think this is really what they're interested in communicating. They also don't want us talking about a recession, right? They haven't wanted us talking about inflation for 18 months. They certainly don't want us talking about a recession today.
That's the focus of the address a little bit later this morning at 10 a.m. Eastern Time. The two-year going into that just south of 4% at 399.55. Ian Shepperton of Pantheon Macroeconomics writing the following: I'm never going to be sick of saying this. Monetary policy works with very long lags. They should have eased back in March. Ian joins us now for more. So Ian, let's turn to that quote. You say they should have gone in March. Let's start there. Why should they have gone in March?
Well, because the softening in the labour market that we're seeing now with the rising unemployment rate that they didn't expect is a consequence of the tightening that began back in March 2022. It's 2.5 years ago, which is what I meant by very long lags. And bearing in mind that, you know, the first year of tightening left rates still at a very low level, both in nominal terms and negative in real terms, the real tightening is the story of the last 12 to 18 months, and that probably hasn't yet fully worked through. So as it works through and pushes unemployment above their forecasts and pushes inflation below their forecasts, they need to be anticipating that, and they fail to anticipate, because if they had, they would have cut rates in March.
Ian, what do you think the strongest evidence of that tightening coming into this economy actually is right now? We had Torsten Slock of Apollo saying he's not seen much of a slowdown. What would you point to?
Well, the fact that the unemployment rate is rising steadily. You know, we just had a big downward revision to payrolls in the year through March, and I think it's reasonable to assume that the data since then ultimately will be revised down as well. So effectively, we're at the point now where cyclically sensitive payroll growth, you know, outside the healthcare and education and government sectors, is possibly quite close to zero. And that's not a healthy situation for the economy to be in, with real interest rates north of 2% and going higher, of course, as inflation falls. So they really need to get a move on. I wish they'd started earlier, but I think the case for delaying now any further, waiting for quote unquote more data, I find that deeply unconvincing. They really need to get going.
And Ian, how far do you think they need to cut, or said another way, where do you think neutral is? And, you know, how far do they need to get, you know, to get themselves out of this kind of restrictive position?
Yeah, I think, well, my estimate of neutral is a bit higher than theirs. You know, they're at 2.8 for neutral. I think it's probably more like 3.5. But of course, if we're going to suffer, you know, a period of really quite sluggish growth for a while and a rising unemployment rate and inflation potentially heading, I think, next year, maybe even below the target, then you could probably make the argument that they need to be below neutral. Not immediately, but, you know, at some point over the course of 2025. So I think they need to do quite a lot. I mean, I think they're probably going to start in September with 25, but I really hope they ramp up the pace to 50s after that, because the rate cuts that they implement now really won't start affecting the economy in any big way until possibly early 2026. So, but that mindset's a very difficult thing to grasp. You know, markets tend to think, well, if the Fed raises rates in January, the economy must roll over in February, and it just doesn't work like that. But I think policymakers also suffer a little bit from this fallacy of rapid policy effectiveness. It just doesn't work in that way. So go relatively quickly, go quite aggressively, and yeah, bearing in mind that the small business sector is really squealing now. It's under great pressure from tight monetary policy, paying 9% for working capital for small companies now, according to the NFIB survey. So this is a very tight environment. Even if it's not screaming out of the current unemployment rate, the danger is that in 6 months' time, it'll be possibly approaching 5%, which we really don't need.
Ian, these are a list of wants. Now we have to get a list of expectations. What do you actually expect to hear later on this morning?
Well, he's going to tell us they're going to cut in September. I think he's going to push back against the 50. And there's a significant minority opinion in markets that is pushing for the 50. I think he's going to be reluctant to go down that road. By the time we get to the November-December meetings, we'll have a lot more data, a lot more inflation data, a lot more unemployment data. Now, inflation is already on a run rate basis well below what they expected in the June forecast. And the unemployment rate, which they expected to be flat forever, is clearly rising well above what they expected. So they need to change those forecasts. And I think on the back of that, they'll start moving by 50s. So, you know, 4 or 5 25s this year in total, so 100, 125 this year, and then more next year. As far as I'm concerned, the more and the faster, the better. But that's maybe because I'm just totally obsessed with policy lags, and I kind of think that the market and the Fed aren't obsessed enough.
And do you think that sort of 25 versus 50, gap is really just driven by labor market data from the Fed's perspective, i.e. they need to be forced to go to 50 by what they're seeing incoming?
Yes, that's right. I think, if the August payroll print is minus 50,